Founding is not just you're building a business, but it's like, on the fly you're realizing, some investor needs to sell and some new guy needs to come in, or the market has gone down. 100 things are happening.
How do you suggest that you have to get to this point before you can go IPO?
In the IPO markets, today you have to give very strong visibility on EBITDA.
Internet companies have to grow at rapid speeds, which means experimentation, innovation, and you keep a long-term view.
The whole idea of ventures to take an idea, a thought, convert it into a product, find this little chasm which people have not been able to find, and really drive growth.
Give us an explainer of the multiple things happening at Norwest, some of your best winners.
Norwest backs you to the hilt. We have a lot of passion. We're very fundamentally inclined. Like, we'll do a lot of work. We won't do every sort of deal that comes by. So we'll have fewer deals to do. We also genuinely believe that we serve on a board.
What is your framework on what makes for a great venture investor? And then what is the, select process, right? Hello. Before we get started with this episode, I quickly wanted to share that we're now a part of the Zerodha Media Network. Thank you so much for watching. Welcome to the Indian Silicon Valley podcast. I'm your host Jivraj, and today I have with me a very special guest. Join me in welcoming Mr. Niren Shah, who is the Managing Director and India Head at Norwest Venture Partners, which is a multi-stage global venture capital fund which has almost $15 billion in AUM. And in India, they've invested in some of the legendary institutions such as Swiggy, 5-Star Finance, Amagi, OffBusiness, and many more that I'm sure you've heard of. Today, we want to deconstruct a lot of how Niren thinks. As a global multi-stage fund, he has a unique vantage point to invest across stages. And I want to break that down for all of you listeners. Thank you so much, Niren, for joining me today.
Jivraj, thank you so much for having me here. I'm a big fan, so it's a real privilege to be here.
That means so much coming from you, and I have admired your work for long. You've spent so many years in the venture ecosystem. You built a company before this, and you were so early to the internet economy that I think there's a wealth of learnings there. And I would love to deconstruct that for many founders, many venture investors of the future, and people in the ecosystem. So thank you so much for being on the show. Where I want to start, Niren, and I think you have a unique POV there, which is that, India has always been questioned on the number of internet IPOs we can see. What 5-10 years before felt like a dream, today is becoming the reality, and we are constantly now becoming bullish on the India story. If you had to give us a precursor to that, right? We're right off the Swiggy IPO. We saw the great pictures, and I think the largest tech IPO in the country. In the world, actually,
yeah,
yes.
In 2024.
In 2024, which in the overall ecosystem feels so bullish, right? It's created multi-millionaires for many employees. It's proven the internet story of the country. Talk to us about the IPO scenario, like what 2024 has meant, and overall exits in the country, etc. From a macro POV, where are we today? And I think that'll set the right tone for the rest of the conversation.
Thanks. So, look, India is an idea whose time has come. Right? As a country, I think that, we used to be in this, in a company called Bazi.com many, many years ago, about 25 years ago. And that time, the Indian internet scene was like 1 million users, right? And at that point of time, 1 million consumers. And we were like, okay,
and this is 2000.
It is 2000, right? And 2001, maybe 2002. And we would keep debating whether it was 1 or 1.25 million users, right? And we'd have these long meetings between the Bazi team. And we would wonder that when would this reach like 100 million or 500 million? And I think that, I think the time has come, right? So as I always say, every dog has his day, and this is our time. I think that even if we just get 7 or 8 on 10s as a country, right? We don't need to get 10 on 10s. We get 7 or 8 on 10s for the next like 6-7 years. I think we're home. Within Asia, we're a jewel. I think there's been many different reasons why, but primarily India has continued to grow, and at scale, it's the largest growth economy in the world, which everybody knows, right? Now, within that, one of our challenges for the venture ecosystem has always been exits, right? So if you talk to a lot of LPs are the people who fund all the VCs and the PEs, they would tell you that, listen, India, we've invested a lot of money, but where are the exits? One of the biggest challenges of the exits is like you go to the US, you build a product, you build a company, suddenly Google comes and says, I love your product, let me buy it for 500 million. That entire strategic layer, which of, people buying companies, that's kind of a little bit missed out in India. It will come. It'll 100% come, but it's taking a little longer. So in the meanwhile, unlike Southeast Asian nations, what everyone's figured out is that we have a very vibrant capital market. Been the IPO journey, right?
Sure.
And I think that as long as you can build a company which is IPOable, and we can talk a little bit more about that, then it is basically a very vibrant market to go to. Now, even within the market, I think I would say that in the 2020, 21, 22, there was a lot of skepticism on new age economies. There was a lot of skepticism on whether companies can actually go IPO, whether those IPOs will hold, right? Whether, venture companies can make profit, whether they even understand free cash flow. I think all of that was proven in 2024.
Yeah.
Right. So I think it's a seminal sort of moment, especially for the startup world, but also for the sort of Indian IPO market. It's been a massive, massive sort of run in the IPO market. And again, we hope it continues because windows in the IPO market can shut, can remain open. But I do feel on the whole, right, IPO will continue to be a really good way for companies to exit. I think that this sort of IPO focus, IPO focused exits will continue. And I kind of right now, if you look at it, 25 so far, at least promises in terms of the issues being lined up to be an even bigger year than 2024.
Yeah. No, I think that's super to hear because I think the bullishness on India is very real. If you had to double click on that, because as a fund, you've now seen multiple IPOs within the portfolio. You're also preparing for many, double digit IPOs in the next 2 years. Talk to us about what does it mean? Paint us a picture. If a young founder is listening to you, how do you suggest that you have to, get to this point before you can go IPO? And your focus on, profitability, your focus on free cash flow is very evident. What does that mean? So if a company has to go IPO in 2025, what's the playbook like?
So today in India, our IPO market is quite different from the US. And I think it will kind of stay that way because of the kind of people we are as investors,
Sure.
Our public investors, very vibrant. But in the IPO markets, today you have to give very strong visibility on EBITDA. EBITDA is nothing other than profit, but before depreciation, amortization, interest, tax, etc. So prior to those items, you have to give very good visibility on that. Ideally, you should be profitable in the quarter before you go public. Now, being profitable is not an end in itself, right? Going IPO also is not an end in itself, but think of it as a gold standard. That because eventually when you start your journey as a young founder and you're sort of starting with a product market fit, you build that, you raise more money, you sort of get better unit economics, then you become break even, right? Now, a lot of young folks, I personally feel, and this is where I sort of tell them, I would just say that, look, your IPO journey just began now. Right? At the point of break even, you can really start thinking of exit in India. You can start thinking of getting new investors, giving your current VCs exit and actually monetizing some of your stake. And that's your IPO journey. So at break even, when you go to an IPO banker, they will tell you it's break even. How can you go IPO? What's going to be your EBITDA margin? What's going to be your sort of profit margin over here, right?
Yeah.
So slowly, steadily, after sort of you've turned break even, you will start growing that margin. I think it will then you'll have to build an entire sort of IPO playbook, which we specialize a lot in, as I was mentioning to you earlier, that our entire sort of, journey over here is that we'll take these companies, and we have about 15 companies which are ready to go IPO in the next 2.5 years. We'll take them and we'll say, listen, you'll need an independent board. You need certain systems and processes. You need a layer of corporate governance. You need to make sure your minutes are properly written down. They are filed. You need to be able to write an IPO document. You need to have a compliance team. You need to have a very strong finance team because, when you go off in an IPO because you don't meet your numbers, right? Let's say in our private markets, if you don't meet the numbers, let's say your business plan was 100 rupees and you did 90 or 95, we'll cheer you. Very good, very good. Great job done, right? Amazing. The markets, if you say 100 rupees, they expect 101. If you end up with 95, your stock is down 20%, right? And that is a big difference. So some of these understandings are almost unlearning the private market and learning about the public market. So to that extent, this entire playbook of how to go about doing it, speaking to the bankers, speaking to the mutual funds, understanding what they're seeking, painting a narrative, painting a story of what you would do, being very clear about your next 8 quarters, having those numbers in your pocket, being able to beat those numbers and raise every single quarter. So those are the kind of things we get into. I think that entire story and journey starts only at the time you break even. You start building the margin, you do all this entire journey, then you go public, then you can probably sell some of your stock, monetize some of your stock which you've already done, which you've sort of grown for so many years. So I would almost say that, look, there are multiple journeys in a founder's life. You're starting at a very initial journey, and that point you just want product market fit, you want the product to go viral, you want people to buy, you want revenue, right? But I think if you want to eventually start saying that, look, your stock might be worth a lot, it might be worth a few $100 million, how will you get cash from that? Then you have to go, at this point of time, at least in the Indian market, to an IPO. And when you go IPO, at that point of time, sort of you have to build that entire playbook to be able to go IPO. And that's honestly where we also help. But also, I would also say that that is honestly the gold standard. That is the goal eventually. Now, I will also in the same breath say that being IPO alone is not a goal. Eventually, you got to run this company as a public company. You got to run it with the best corporate governance. You got to keep, take an example like Naukri. See how well they've done it. This company has gone public for many, many years. Every single year, quarter after quarter, they drive, amazing results. They continue. And then what you realize is company which has probably gone public at, less than $1 billion is worth, $20 billion, $50 billion. And I think there's going to be a time very shortly where some company is going to cross $100 billion in new age in India,
Yeah, no, I love that. I think that is super nuanced. I'd love a leading question to that, which is this dichotomy. A lot of the broad public narrative is that internet companies have to grow at rapid speeds, which means experimentation, innovation, and you keep a long-term view. However, as a public company, you need to show predictability. You need to be showing sustained profits. You need to not be able to take as many loss-seeking experiments, which may be required for rapid growth. How does as a founder, right, like how do founders manage this dichotomy while showing short-term quarterly results which are really vibrant, yet looking at what the next 10-15 year story is? Because you keep reading, like even Swiggy is a good example right now. I mean, I think there's a PR which says that they're going to go into amusement parks and out of home services like sports, etc. There's always the next 10-year thing, as well as like they did these quarterly results yesterday. So how do we manage this?
So I think by the time, see, when we look at again venture, right? I think the whole idea of venture is to take an idea, a thought, convert it into a product, find this little chasm which people have not been able to find, and really drive growth, right? And get some scale in a good market. I think by the time you're getting to IPO public markets, a very well kept secret is if you grow 25 to 30% in a public company, that's great. That's absolutely great. And you don't have to grow revenue. Eventually, you're looking at growing your profit.
Bottom
So
line.
sometimes you're growing at 20%. Like, do you know that Hindustan Lever actually grows at 5 to 10% revenue? They still have a very nice multiple. Because, and then the whole idea is that you grow your revenue maybe by 20-25%, but your profit is maybe growing by 35-40%. That is a phenomenal company in the IPO market. So I think by the time you reach IPO, you are a larger company. You got a full management team, you got your compliances, like I said, your entire structure, you know your playbook, you know what you're building, you know why you're building what you're building, right? And so I think at that point of time, you're certainly not looking at crazy 100% growths, right? And because of that, you have to manage your business more towards stability and scalability rather than just high growth. Right? You need to grow your profit, you need to make sure your margins work, you need to make sure your free cash flow works. So and remember that public markets are very unforgiving when there are certain, and we've seen a few examples of that, where certain direction is given and then you're not able to stay there. So I would say that till you've gone public, you should figure everything out. Right? You will always be allowed to do innovations, new things, but that will all be done in a slightly more tepid way, where you will have a certain budget when you're public to do that. You can't go crazy. When you're private, you can talk to your investors, or you can do it yourself, or however you want to do it. You can try a lot more experiments. When you're public, it's a little bit more limited. You have to be a little bit. It's a little bit like growing up, right? And you're not going to go and completely, have a crazy time at the party as you would when you were in school or college, right? So it's a little bit of that. And then once that's done, IPO markets reward you much more handsomely than private markets do, right? So the multiples you get, the kind of joy you get of seeing, random people on the road saying, I subscribe to your IPO and I'm so happy it's done so well, I'm such a big fan, which we've seen in places like Swiggy, right? That's just a very different level of joy.
Yeah. I can imagine. I love how nuanced and systematic some of these this articulation is. So thanks so much for sharing. Let's maybe take a step back. Let's come
Sure.
to Norwest. If you can give us a brief explainer of because you do multi-stage or a global fund, and because India does multi-sector as well. If you can give us an explainer of the multiple things happening at Norwest, some of your best winners, and perhaps talk to us about your ideology in terms of investing in some of the best institutions in India. Would love to hear that. And then maybe we can go deeper into what some of those nuances look like.
Great question. So let me tell you a little anecdote about Norwest, right? When I joined Norwest, I had 6 offers from different funds. And at that point, Pramod was then the managing partner. He had a strong Indian connect. He's an Indian who's moved to the US. And I realized that they were there for good. They were there long run. And that was really one of the exciting things. I also sort of really spent 12 months in Norwest US. I was working there that time. Prior to that, I was working with eBay Strategy and Ventures. I was heading that. And I spent a lot of time just sitting with all the partners there and understanding the Norwest way. Right. And that was my only requirement. I said, listen, please allow me a little bit of time to understand this. And I realized what I really love about Norwest is that they, a lot of people say founder first, etc. Norwest backs you to the hilt, right? It is not one where, I mean, it's like, wear your passion on your sleeve. If it's an early stage company, keep trying your best to make it work. Like you do everything in your power, right? And, and again, I continue to see that sort of absolutely happening in India as well. So we have a lot of passion. We're very fundamentally inclined. Like we'll do a lot of work. We won't do every sort of deal that comes by. So we'll have fewer deals to do. We're quite contrarian in how we think. We're very different. Like we also genuinely believe that we serve on a board. We don't sit on a board, right? And what happens is you're like an invited guest. This is like, you're a nice person who's come into somebody's house.
Yeah.
Please treat yourself that way. Please be cordial. Please be polite. Please be helpful, right? Rather than saying that now this has become my house, right? So to that extent, this whole sort of serving on a board, we take that very seriously. It's our founders are like our customers. Customer is always right. And of course, we will give them our views and others, but the call is eventually there. So there's great respect for that. We've not had any, litigation. If you take our entire 50, 60 companies, it's been a smooth ride, right? There's not even been a single sort of, when you have these compliances and you have these consents and board meetings, not a single one which is non-unanimous. So I would say they're very, very focused on the founder. Norwest was started by a bunch of founders. So that's where the philosophy comes from. And again, the way I look at it is, look, if you wanted a boss, that's why we serve on a board. We don't sit on a board. If you want a boss, you won't be a founder. Yeah. Right? It's you want to do this your way, and we're here to help you in sort of making sure that you can meet your sort of legacy, meet your meet the sort of performance, whatever else you want from yourself, right? Sure. So that's a little bit about the softer sides of Norwest. I really like that. It resonates. It's kind of like you do it in your own style, in your way, but fundamentally you have to be very thorough and you have to be available, right? Every night I have office hours where founders call me anytime between 9 and 12 every single night. And I don't think they bother to take, calendaring board. It's very difficult. So they would just be like, let's call up Niren, and if I'm on another call, I'll return it and we will close it then and there. Should not have to calendar, right? It's very painful. So that's the kind of philosophy. Norwest is, I've been with Norwest for about 6 or 7 funds, right? This is our 17th fund. We're about 60 years old. Like I said, we've had very good returns. I think one of the things which we are very proud of, but the market would expect more, is we like to be under the radar. I really feel that it's really important for your work to speak for yourself, and that's the Norwest way as well. So, even starting at some of our previous managing partners, we don't do too much in terms of PR and stuff like this. And it's in fact, it's just better to kind of work and serve your companies and spend all your time there rather than, and the work will do its talking and outcomes will sort of, make sense. So that's a little bit about Norwest and what we do. We've got 15.5 billion under management. Our last fund was $3 billion. Every 2 to 3 years, we raise a fund. It's one global fund. Right. So what's unique about us is one global fund. It works very nicely. We've got a set of folks in the US. That's a large part of the fund. We've got a decent amount of that which gets sort of invested into India, and we've also got a small piece where we invest in Israel. So
Got
this is a little bit about sort of Norwest. The beauty about one fund, of course, is that there is tremendous value add if a company from here is going to the US or going global, things like that. And again, I've been here for 17 years, so most of my colleagues in the US are now more, instead of colleagues, they're more like friends.
Yeah.
So it's been a real journey there, right? So I don't know if I answered the question. You had
No,
something,
yeah,
some other part.
this is helpful.
Yeah.
Is there an internal demarcation to say that this is earmarked for India, or is it very fluid to say, given a particular year, you'll invest more?
It's very fluid to say, what we'd invest. It depends on the quality of the deals, where relative, so we always look for, look, what is the best set of founders we can back, and if that is coming from the US, so be it. If it's coming from India, but I will say that very proudly that India's proportion in global keeps going up every year.
Oh,
Right,
lovely.
so somehow or the other, this has happened in the last 7-8 years, that every year, every fund, the proportion continues to go up. And I would say that at least our US colleagues have been very, very supportive and very enthusiastic about investing behind founders. In fact, our managing partners now come down every year to meet some of our founders. We host an event for the whole ecosystem, etc., etc. So
Got it.
so it's
No,
been
that's
very
lovely to
positive.
hear.
Yeah.
In terms of just specifically investing, considering that you're multi-sector, multi-stage,
yes. Yeah.
I would love to understand the thought process behind that, because again, there are multiple schools of thought on that. Some people claim that having a standard pool of capital for a particular stage or a particular sector perhaps gives you a better advantage to underwrite a particular company. But in your case, it's pretty fluid. How does that not just work, but how is that beneficial for perhaps founders as well? If you can talk us through, that'll be really helpful, Niren.
So we're quite specialized in what we do, right? Because of the nature of sort of who we are. I think Norwest basically globally has got 4 spaces we invest behind. And one side is the venture part, which is US venture and Israel venture together. They do both consumer and we're known for enterprise venture. The second is there's growth equity, which we've done in the US, where we even do things like buyout and things like that. But basically it's tech and consumer, and that's what they kind of focus on, maybe some services as well. And that's another large area of sort of focus for us. The third is healthcare. We're actually a very prominent healthcare VC, biotech, and healthcare growth fund. And the fourth, for want of a better word, is India, right? So in India, it's a microcosm of everything. We are quite sector agnostic, stage agnostic. So we're currently looking at an auto component deal. We're doing some industrials. We're doing something payments. We're doing financial services. Of course, we do all the tech and the healthcare and all that other stuff. So that's how we do. Now, each of these sectors or each of these spaces or groups, as we call them, these people have all built tremendous expertise in that area. Right. So even if we do something in India, and I know it's kind of called this sector, it's not a sector, it's a country, but it's called that. We would have like some specialist looking at financial services, someone looking at fintech, someone looking at SaaS, someone looking at autocom. So we're very specialized. So it's very thesis driven. It's very top down. We like certain spaces. Like look at healthcare. We're doing high end biotech deals in the US, right? We've got 3 people who are not only doctors but also PhDs, and they are sort of at the cutting edge of some sort of a cancer discovery drug. I mean, which will be in different stages of FDA approval. So each of these areas, while they're different, and we're all sort of part of the same, so we've got some great, we've been able to see some amazing companies being one fund. There is a lot of specialist expertise. So what we found also that, for instance, today if there's a biotech deal in India, I won't do it on my own. I will tell my US counterparts that would you like to be part of this deal? Would you like to be part of this funding this company? And they might be able to help that company get US FDA approval, which is impossible to do unless you're really super specialist in that area. Or similar, we're doing a consumer deal. There are a couple of companies in consumer here which want to go to the US, right? And we're actually helping them go to the US. They're launching in the US, and we can provide tremendous expertise there because we can literally get them a deal with Walmart, with Target, and imagine the kind of distribution you can get when you have that kind. So it's a very different. There are 30 people who help in portfolio services in the US, and all our companies are also as eligible to use all of them to sort of launch in all these countries, etc., etc. So that becomes a huge benefit for. And by the way, vice versa is also true. So there are companies who want to come to India, outsource tech department. Some of them are coming for the business, and we are helping those launch in India. So it's a great,
That's lovely.
yeah.
Yeah. No, I think that really helps. So specialists in what you do. Let's maybe come to so much of venture is about knowledge transfer, and you referred to that, and so much of it is institutional building within the firm. Can you share more about how the team is internally structured? I had the pleasure of chatting with somebody very briefly from the team before this as well, and they mentioned that it's a very flat structure. Everybody has a voice on the table. Everybody comes in prepared, and it's a very diverse team as well. There's a lot of longevity within the fund as well. Talk to us about because part of investing is also building this institution, and considering that you're the stalwart for India, how have you sort of thought about that part of the business?
So I would just tell founders and even VCs, the most important part of this business is the team, right? And I personally think you live and die by that, right? So whatever we have achieved so far, right? All credit goes to our team, not just the present team, but even the past team, which has been with us. Our average people staying with us has on average been more than 8 years.
Oh, wow.
Right? So, and again, if we've rarely lost people, I think, and I'll explain what I say in a minute. So my 2 cents is that, look, when I was younger, I used to always wonder that why is this organization, maybe a place where I'm sort of working, built this way? If when I grow up, I would do this, right? And then luckily for me, I got a chance to do that. So we built this team which is very democratic. Right now, in a couple of the other rooms, we are doing this Friends of Norwest event, and the teams are deciding, right? And it's a big list of people to be invited and stuff like that. But so what we've done is a very democratic framework, right? So I can love a deal. I'll be sitting there and pitching my deal to the whole India IC. Our India IC includes the analysts also, right? So we've not said that because of it. In fact, whenever we've had interns, they join too. And an intern who could be doing a summer here comes well prepared with good ideas, good thoughts, can absolutely kill my deal, right? So it is very democratic. We built it that way, and honestly, they've done that also, and I still thank them for it. Because so I think that what happens is, a lot of the younger folk, they are much more in the market, they're seeing something, they've got they're very driven, and I found that they are just tremendous. Like, if you're not listening to those people, your decline has started, right? So to that extent, we have, and then what we do is we're very close as a team. We've sort of got 10-12 people. It's not more than that. We're managing about $3 billion today, at market value AUM, but it's only 12 people, right? And it's a very intense team. In fact, these guys they're just amazing. There is strong gender diversity, which we're very focused on. And overall, we'll sort of go twice a year for proper offsites. They can ask anything again, so I get subjected to a lot of questions which I don't know what to say. So we're very transparent and open. And I think the folks, when we do our 360 degrees, what they really appreciate is the openness and the transparency, saying you can ask anything anytime. So people will pop into my cabinet and say, Niren, how am I doing? Am I going to get promoted or not? Right? And I'll tell them, okay, here are the 4 things why, yes, here we're giving you strong guidance, it'll happen. Or by saying, listen, I'm not going to be able to give you guidance today, and here's the reason why, but if you do this, we can give you guidance on that, right? We made sure the comp is well benchmarked, we pay well, we're not trying to, cut corners. So a lot of these things, again, I thank Norwest because they've allowed us to do that, right? We've gone one step further also, and I've told people that, look, eventually, we are mentoring you and we are connected at the hip in many more ways than one. For some reason, should you decide that you're tired of me or you're tired of the team or whatever, you want to go out, we will help you, right? We will not come in your way, right? We will help you. We'll rehearse your interview. We'll tell you 10 interview questions. So there are people who we get interview calls all the time as a team. They come and talk to me very openly saying, Acha, iska interview call has come. I said, you should go and interview. Then after the interview, I said, listen, do you want to consider it? You're a good pros. So the minute you do that, it's a very closely knit team, because we recognize that at some point, there's going to be someone who's sort of, getting a great opportunity which we can't offer, or there may be someone who wants to do something different. Why hold back, right? Why not just be open? And, honestly, if you're doing a good job, they will stay.
Yeah.
And if you're not doing a good job, they're going to leave. And I find it very, I don't know, I've at least found that it's a very nice, amazing team. Like, we have a tough recruitment process, right? It's 11 interviews, 5 case studies, whatever. We're always looking for the right fit. you know, and the fit is not the same kind of person. We're actually looking for a lot of diversity. So we want, like, if these people all sound the same in the IC,
Yeah.
that's not really helpful.
Yeah.
So I really strongly feel that this kind of business, because there's so much judgment involved and there's so many different things, you have to do a deal. But if you don't do a deal also, like, you know, if you do a deal which is bad, that's also not good. But if you don't do a deal, that's also not good. So my learning, at least here, has been that at some point of time, get different people to help you build this business. So the way we approach Norwest India is like an entrepreneurial team. And I tell these people, you are all very early sort of co-entrepreneurs with us, right? And we're building. So someone has come up with a better idea of how to do offsites. Someone has come up with a better idea of saying that, look, how should we do our events? Someone has views on whether we should do more PR or not. And everything is open. And then we just say, listen, co-opt you. Come on, you help me. We'll do it together. And let's run with this. So I think there is a lot of, we're out to build a legacy, right? And the good thing is that every member of the team is a co-partner in that legacy. And our entire thing is that not just when you're here, right? There is a lot of carried interest in even when you are out of the team. So we have some very prominent alumni like Sumer Janeja, who heads SoftBank, you know, Ashutosh Sharma, who heads Naspers and Process in India, right? We've got Anirudh Singh, who's at with Avatar, and of course Mohan, who spun out and started Avatar. And you know, so and Soul Chand, who has his own fund. So we got many people who are very prominent alumni. They're all doing really well in what they do, and we're very proud of them. But you know, we also very close to these alums. So tomorrow, if they want to do something with permission from the founders of the company, we'll tell them, look, we know them really well. We fully trust them, right? All of them have done so phenomenally, you know, and we've done some amazing deals together in some of
Swiggy
these
being a
cases.
great
Yeah,
example.
Swiggy. I mean, you know, that deal was originated initially, you know, by Sumer, right? And I was a co sort of sponsor of that deal, and then we worked very well together. He got a great opportunity to go to SoftBank, right? He did a phenomenal job over there. And in the meanwhile, you know, Ashutosh came in from Naspers. At that time, Naspers, now Process. He was with us in Bangalore, and he had moved to Process, and he knew Swiggy's a good company. We spoke to Harsha, gave him full access, came to our office, saw everything, loved the deal, decided to sort of partner. Larry was my ex-colleague, who was Ashutosh's boss at eBay. Right. So look at the connection. So Larry trusted me. He said, okay, are you sure we should come in with a big check? Eventually put $1 billion behind Swiggy, right? And then of course Sumer, who always has loved Swiggy, came back as in the form of a SoftBank and again sort of re-upped and put $500 million. So a lot of these things, I would just say that there are a lot of connections. For me, it's a very proud moment of how well Sumer has done, or how well Ashutosh has done, or how well Anirudh has done. And Anirudh was also on the Swiggy deal, right? Together with this. So again, how well Mohan is done. So in some ways, I think we're all connected. And I think the minute you stop worrying about sort of this person to leave or that one and just have a little bit of an open mind and open heart, I think that you get much richer dividends, right? And I think today I give full credit to, like I said, present and past teams for sort of what, you know, whatever little we have been able to achieve.
That's wonderful. I think it's such a treat listening to this, because I think you hear that venture is truly a, you know, people business, right? And this just proves so much of it and puts it into context. And that's just like a lot of foundationally strong thinking is what I'm hearing. I would love for you to double click, Niren, on what these components look like that help you identify the right set of investors, and perhaps by extension founders as well, right? So much of the job, at least from what you said, right? I think a large component of that is filtering and having a very strong opinion on whom to get, and that's what will then lead to longevity, to great relationships, and, you know, building the firm in a meaningful manner. But what is it that defines a great investor in your mind? Then how do you look for some of those things, right? And maybe the latter part is, and the more important part for all in founders listening, what defines a great founder for you? I would love to understand your mental model for this, because so much by extension is what that, you know, what all of it gets defined by. So yes.
So according to me, let me start with the much more interesting one, founder.
Yes.
Okay. A founder is a absolutely different kind of animal, right? This is not a person who is walking a normal road, right? According to me, there is something totally different about a founder, and you should be able to spot that in the first 20 minutes of talking to them. Typically, a founder is a force of nature, right? So when you say force of nature, like, you should also be able to feel. You should, when you speak to a person, you should say that, you know, this person wants to change something dramatically. It is like if you have 500 people walking in a particular line. This is a person who's likely to be a little out of line, looking around saying, how can I get ahead, something, because you are trying to disrupt, right? And by nature, there are many followers and there are fewer leaders, right? So I actually think that we are looking, and our job is in the first hour of the meeting to sense whether because it's really driven by the founder, because founder also picks the team. The founder picks the space. So people talk about founder, team, space, market, all that, but literally the founder is the starting point, right?
Yeah.
So getting she or he who understands what they do, like, so for us now, the next level is, do you have the energy, right? Do you have the sort of analytical mind? Do you have the critical thinking? Do you have the ability to attract talent? Do you have the ability to retain talent, right? Those are things which we find critical. I also like founders who not only have sort of the product tech thinking, but also the financial engineering thinking. Because I find that a lot of companies have reached a certain stage and then they have to go back to the drawing board because they've not been thinking of because the end goal, it is unfortunately financial, right? And you have to think through that. People don't hire finance people. They get into the same, I mean, I've seen it too many times. So for us, it's just that, do they understand numbers? Do they understand that this eventually has to make a profit? This eventually, as we discussed earlier, has to list, right? And if they can do that, then that is very unique. And I've also noticed, like, if you look at our Bazi team,
Yeah.
right? We were like trying to build this eBay of India with 1 million users, right? We still got an exit. We got an exit, and we got a good exit for us. At least there was a lot of money at that time. We sold for $60 million, which was today maybe very tiny, but for us at that point, 25 years ago, it was a lot of money. And the reason was we had just some tremendous sort of, team members and leadership where each one has gone to do something of really, crazy repute later.
Yeah.
But and the reason for that is that, look, each of them were like, they were truly founders, and each of them built something out of that. And despite not having a market, we built a payments business, we built a B2B business, we built a B2B motors auction business. We were just building more and more because we realized that, look, we have great talent, but the market is, like I often joke saying, we built an amazing boat, right? Think of this fiberglass canoe. We got the best guys, and the best sort of team to sort of build all your muscle and fitness. We were rowing furiously, everything in tandem, just no water in the river, right? And so what happens is that when you have no water in that internet river, so when we finally got sold to eBay, Meg Whitman said, your product is 3 years ahead of us, right? 3 years ahead of us in terms of eBay's this thing, right? And we were sitting there because what else can you do, right? The market was still 1 million users, right? Today we discuss 800 million users. It was 1 million. So my 2 cents is that a founder is the starting point. And you are really, according to me, about 80-90% of your bet is on the founder. A great founder will hire a great team, which is really important. A great founder will pick or pivot into a market which makes sense, which has size, which has scale, which is growing, which can give you margin. And then, of course, then the story continues. So we spend a lot of time trying to understand things like their childhood, sort of what has driven them, what's their motivation, what would create issues for them, and I think we're a little less focused on what they're actually doing. Because our belief is that, like, we had a founder in Norwest in the US when I was there, and he had done 3 Norwest companies, and he came for the 4th one, right? Or he'd done 4 Norwest companies, 3 had done really well, 1 had done okay. He came for the 5th time. I said, he has money, why is he coming to us? So he doesn't come to us for money. He comes to us for advice.
So he raised from Norwest 3 times before?
3 times, yeah.
Oh, wow.
Yeah, 4 times before actually. One outcome had done, came for the 5th time. So we're like, I was new and I was learning, and I was like, hi, what is going on here, right? And so at that point of time, they said that, look, they want us for this. And I was very impressed. But then I was more impressed with what happened next, which is this person made a plan and made this thing, and made a entire business plan, which made no sense. So I came out of that meeting. There were 5 or 6 partners that time, way back in sort of when I joined in 2007, sitting in the US. And I said, honestly, I may be the only person because he's clearly done very well in life. It made no sense to me. So it made no sense to any of us. So I said, but you just told them you're going to fund him. It was a very quick response. They said, yeah, because we know him very well. This person was basically, this gentleman always starts off like this. Then he will do 100 calls and he will pivot. It will look very different as a company. We're betting on him. So basically betting against his plan, because that plan made no sense, right? But I think that epitomizes eventually you should know the founder well, you should have great relationship as well. And then the whole idea here is that can we help them meet their own potential or beat their own potential. So I think just getting to get a good sense of that person, what drives them, why are they here, what is going to create issues, what is going to sort of, like, are they good with people, are they differentiated, are they sort of got that energy, right? Will they, like, you have a founder called 5 Star, on Sundays his pastime is to go and visit branches and his people, right? And he just does that all across, like, every Sunday of the year, right? So what's the motivation, right? What's driving them? Those things are really important. And then of course, what's your vision? How long are you going to take it? So those are things which I think matter are a founder. I think for a VC it's very different.
Before we get to the VC,
Sure.
I think you've had the pleasure, and I don't mean to single out anybody, but Harsha at Swiggy, Ashish at OffBusiness, Ranga at 5 Star, Bhaskar at Amagi, Gigi at Gabbit, right? There are so many different examples. I mean, if you can help us contextualize some of these, like, just because so much of this is qualitative, right? Like, where did something spark? Was it a conversation, an instance, a meeting, a plan of action where you saw something distinct and you put a bet and say that, okay, this is what you go forward with? Because you must have met Ashish, you met him twice before you actually invested, right? So there were evident things, but it was a turning point that made you perhaps invest. Of course, much of that is also quantitative in nature. But what were some of these qualitative things that you can correlate with some founders that we might know? I would love to hear from you.
So I'll start by saying there is no pattern.
Okay.
Right? We've always thought very hard. At Norwest, we did a project trying to benchmark over 10 years, different founders, and see a pattern. We realized there's no real pattern, right? Because a lot of things change. I think in each of them, we really saw 3-4 key things. Number one, that, and there are many more founders, right? So there's Anand, there's many more other
Of course.
founders,
I didn't
right?
mean to single
So,
out anybody.
No, that's what I'm saying. So we saw that they were forces of nature. Right? Like, we really felt that when they walked into the room, when they spoke, when they this, you could feel a different level of energy, right? You could feel a different level of passion. You could see that, right? You take some of the people you mentioned, each of them, right? Like, not one of them, you will feel like when you spend 15 minutes with them, you will realize that, okay, this person is different. They are here to change the world. They're not here to be part of the world, right? The second thing is they had some very clear-cut thoughts and plans of what they were going to do, right? In Ashish's case, is now a very famous anecdote, but he had come to us twice before, and we was doing a financial services company that time, right? And that was supposed to be like the OffBusiness has pivoted a lot and done a lot more, but it was that time doing a lot of financing. And what we know financing really well. So we told him that, listen, you have to be profitable, because in the financing business, sooner or later, you're building it not just by equity. It's 1 part equity, 4 parts debt. To get debt, all the debt lenders want profit. And to get cheaper debt, you need a credit rating, and that wants profit, higher profit, right? So effectively your cycle, your virtuous cycle is only starting once you become profitable. So we told Ashish that, listen, we love you, right? But you come from the venture world where all these losses are very good or whatever. But in this business, we don't think so, right? So the day you become profit, come to us, are profitable, and we will do it, right? He came to us 15 days after he turned profitable, and the deal was closed in 2 months, right? So that was Ashish, right? So each of these people, there is a story, and it'll be an interesting anecdote. I think in GG, we just saw the work he had done at Zomato, right? We knew that, and of course, Swiggy, Zomato, fierce rivals, and of course deep respect for each other as well. And we saw the work he had done prior to IPO, and then every time we spoke to him, just different category, right? So like we realized that just the thinking is very different, what he was trying to build, what he's building with Gabbit, right?
And he's executed so well in a year.
And it's his personal journey. Like this is his life. He loves it. And the way he's done an amazing job, right? He lives it every morning, right? Every morning, evening, night. When I call him, he's like telling me, okay, what are your numbers on the health side, right? It's not like he's not sitting there and telling me what are this thing, right? So in most of these cases, what I've at least found is that each of the founders brings something to the table which is unique and differentiated. They have a clear-cut plan. There's a vision. There is a plan, right? Sometimes the vision is very tall, right? And that's okay. And then you have an execution, and you sort of try to see that they can execute. Because I found there are many founders who are great visionaries, right? And they've never been able to execute, right? So can we see some background somewhere in their career, somewhere in their previous jobs, somewhere in their previous entrepreneurship, that they were able to build something, of value, something which was unique, something differentiated, but build it,
Yeah.
execute it. So I think
Got
those
it.
would be a few things. And then of course, I think just the ability to, attract people is just critical. You cannot build a $1 billion, $10 billion, $100 billion company on your own. Attract and retain people who are having a lot of fights with people, or just all the teams keep running away, all that. I mean, those kind of people, eventually it's a very hard thing. You may be brilliant, but it's very hard, right? You're just kind of making it more and more difficult for yourself. So
Yeah.
that is also, and if you notice, the best of the best teams, right, people love, like you take Niren Shah, the whole of Swiggy absolutely loves and adores him,
Yeah.
right? They respect him, but at the end of the day, they just like, they would do anything, right? So that, I mean, that level of sort of, founder, very hard to find.
Yeah. No, that's perfect. I think that contextualizes a lot of it. I want to come to the what makes a great investor, but the final loop on this is, I think as the ecosystem matures and people like Gigi startup, people like Anant Mensa startup, which what I'm bracketing by them is folks who've spent operating time, they've built operating leverage, and they know how to like see scale, run at scale, right? Versus, let's say there are younger founders with perhaps not as much experience, haven't seen scale, haven't chased capital before, etc. Is there a preference for one versus the other? And what is the trend you're seeing increasingly in terms of the newer companies that you meet? Do you see more senior operators starting up? And will that be a leverage pointer, or something that you will prefer as an investor? Or is the playing field as much level as it was?
I think the playing field is as much level.
Okay.
When it comes to Norwest, right? We are doing more, let's say our one line is 5 years to IPO. That's what we are funding, right? So there is a benefit of having a repeat founder,
Sure.
right? Because they know how to do it, they will get the capital. So yes, if we don't do as much early. We do it by exception. So Mensa, Gabbett were the exceptions, right?
Yeah.
But the reason we do that is because these people have been there, done that. They've seen the entire zero to IPO sort of journey, right? And because of that, I think the whole, the journey becomes faster. Otherwise, what it's going to take is 10, 12 years. And that's just not like sort of not the desired outcome in
For
terms
you as
of
a
where
fund.
we come in as a fund. But when you look at it in terms of supposing somebody is a 24-year-old person, has built an amazing company and come to us, there's absolutely zero difference for us.
Got
In
it.
fact, I mean, at some point of time, I'm sure they will rank higher on energy and all that.
course. Harsha came with very little experience.
No, but he was also, I think Harsha was also not early 20s or something, probably late 20s,
worked
or
a
he'd
couple of
worked in
years.
different places. So I'm
Yeah.
saying we are very open-minded. Like, I think there's no need to
No template.
differentiate. There's no template. But like I said, if you're coming in early and you want to take a company in 6-7 years to IPO,
Then
it is harder.
helps.
It is better to have that experience than not.
Correct.
Right? But if you're already 5 years in, 6 years in, you built a nice company, now you have another 6 years and all, that's fine. It doesn't matter. So it's more been like the way we are structured and what we're seeking, rather than sort of anything to the type of founder.
Yeah. I mean, I also meant to generalize not from a HPOV, but from an experience operating
But
excellence.
I'm using age as a this thing. I'm saying that
proxy
experience.
for
Yeah. See, because a
experience.
repeat founder understands the mistakes you made
Nuances.
and the nuances. No, a lot of mistakes. See, because founding is, it's not just you're building a business, but it's like, on the fly, you're also understanding the unit economics. On the fly, you're realizing, some investor needs to sell and some new guy needs to come in, or the market has gone down. So 100 things are happening. I think a founder who's sort of, either got great mentoring or someone who's distilled that and gone through that journey,
Always
I think
helps.
it's like it's so easy, right? It's, I mean, once it's like going for your first Olympics, you're nervous, but if you've gone for your third one, right, it's much easier. At least the nervousness quotient and all is much lower.
The odds, at least like theoretically, are far better.
Odds are better, and I think, in some ways, like for a VC or this, I think timing is important. We are also built with a certain framework. The people who have given us money have said, listen, you have money for 10 years, right? In that 10 years, for a company, like, within 6-7 years, you should try and exit. But chalo, if it takes a little longer, there's no problem. But if you're building something which is going to take 15 years, then fundamentally you're going to have to sell it to someone else. You're not going to take that journey to its closure, not going to be able to take it to the public markets, or if there's an M&A or anything of that sort. So in some ways, at least what we are trying to see is that, look, when we come in, after we come in, we can take them to that journey and we can deliver also for them, right?
Yeah.
It's not a one side, it's a sort of, two-way street, yeah.
Yeah. No, this is very helpful. I think we've covered a bunch of ground on the founder bit. I want to come back to the investor bit, right? Because so much of what you defined feels like great culture, but getting to that right person at the firm, and also now you've seen multiple investors across the board in your companies who've done well, who've led follow-on rounds. What is your framework on what makes for a great venture investor? And then what is the select process, right? I would love to hear from you, Niren.
So I'll start with what makes for a good investor, not great yet.
Okay.
Okay. I think you absolutely have the basic sort of quant skills, understanding skills, and I think judgment, right? So judgment on who to back, how to back, because investing, especially in an early stage company, is effectively like a marriage. You're going to be there for 7-10 years. And of course, my marriage has lasted longer before you say anything longer. It's been 25 years, but it feels that long, right? You will go through ups and downs together. And at that point of time, you will have to trust each other and have faith, right? So the ability to judge that this is the right investment for you quantitatively, qualitatively is really important. But I think that greatness comes with the softer parts, right? And one part of that is for me empathy of understanding what the other side wants and whether you can deliver it. I'll just give a very interesting anecdote. Okay, when we invested in Five Star, okay, Lakshmipati sir, he's the founder of Five Star. He was, he's been working in this company for 15 years. And the last 3-4 years, he had taken money from our good friends at Morgan Stanley and before that at Matrix Partners. So we really loved this company. We tracked it for 3 years, but now he was running a process, much to our dismay. We had met him and we wanted to move very fast. So we basically went before the process using their help and conveyed that we were very keen. We understood this business, cold, and he should do this. Before we knew it, in 2-3 weeks, there were 11 term sheets, right? And all the who's who of the world, everyone was there. And I think all the term sheets were around 920 crores. I distinctly remember the number and I'll tell you why. Now we worked very hard. We were like, what does he want, right? We spoke to his team, we spoke to the co-investors, and we basically realized that for him, just, the struggle he's gone through, the hustle he's gone through, he was very keen to get to 1,000 crores, right? Now, of course, the first answer is we all want to negotiate. We recognize this was a very deep thing for him because it was a culmination of 20 years of work and for all his investors and all his, personal sort of friends and family. And he really felt he deserved it, which we really did not disagree. We went at the back, showed a lot of hustle. Within a couple of days, got our approvals. In the early days, we had to take a lot of approvals from the US. It's changed now. Got all this done at 1,000 crores. And we knew that he was meeting one by one these 11 people at the Oberoi, right? Very close to our office. So we went and I think he had met 4 people and he was somewhat disappointed. And we went and we chatted. And Pati sir is a very to the point person, right? About 5 minutes into the conversation, he said, look, Niren, I said, sir, what are you looking for? How do we make this happen? He said, Niren, you are at 900 crores and we would really like this to be 1,000 crores. It's not that different. We are outperforming our numbers by 10-15%. So anyway, should not be a problem. So, I looked at him. I said, sir, is this really important to you? Which I knew it was. I just wanted confirmation. He said, yes, it is. And I said, I took my hand out and I said, okay, sir, then done. He was stunned, right? Even till today, he talks about it. And he says, you were the only guy. I met 11 people and he told me, Niren, that's a deal. And we closed and we shook hands. And it's not like I just closed there. It was not a whim. It was a lot of hard work, a lot of hustle at the back. After understanding what was really important to that founder, right? And I think that sort of empathy is really important, right? The other thing I've often found is that my 2 cents is that, it's the above and beyond, right? So you have to do a certain job, but what did you do above and beyond, right? Like today, for instance, like I know it's a little crazy, but it sounds, this office hours after 9 o'clock, anyone can call anytime, leave a missed call, we will call back, right? It takes a toll on you, but people love that. But, another one I remember is like Harsha, from the Swiggy founder. Okay, now he's an absolute amazing person, right? And he's a very lateral thinker. And trust me, the way he can think ahead of time and he thinks in decades. He does not think in years, right? And at the same time, he's the reason why his team absolutely loves him and why he's loved across the ecosystem is he's very thoughtful, right? So Harsha, I mean, I'll give you how important this is. That Harsha actually told us when we gave this Swiggy term sheet, and you know that we sort of came in the middle of the seed round, and we were doing the sort of next institutional round, and there was no space, so we started the round before that round had ended, right? And there were 6 other people because Swiggy was doing well, and we really wanted to do what we wanted to do. When we gave that, he did not know how to decide. So he said, Niren, can you give us names of 3 companies you have funded, right, which did not do well? Okay, and I repeat here, did not do well. Because most people ask us for names of companies which did well.
Yeah.
And what did you do and all, did not do well. So we gave 1 or 2 companies which literally did not do well, where we lost our money, and we all, and he actually, and later I found out, of course, he called those founders, right? And he called the founders of all the other 5, 6 term sheets, and he compared notes, right? And he asked them questions like, how did they treat you when you were down? Right? How did they sort of, eventually, how much fight did they give before things sort of maybe went bad or whatever it was? How much did they help you? Were they constructive, right? Were they a boon or a burden? He asked all these questions, right? And it really shows, firstly, for me, it was like no one else has asked that question again. No one else has ever done a ref check. So for me, it's such a lateral, because he wants to know what kind of people you really are when you are in times of trouble. And my learning is that is the above and beyond. That, when we were at Bazi also, there was one board member who tell us, look into my eyes and tell me you'll meet this plan. We never met a plan because there's only 1 million users. Abhi kaise plan meet karenge? And there was another guy who would actually come to us and say, look, let's take the same consumer. There are no more jada consumer to hai nahi. Let's take the same consumer, sell more services. Sitting down with us, doing working lunches, flying down from Hong Kong and helping us on that. Right? So I think always my 2 cents is that the ability for, like, you are the entire package. You have to be. You are their family, you're their friend, you're the friend, philosopher, guide of, if you're a good VC and your lead. So you have to be above and beyond. And that above and beyond was epitomized in my mind by what we had done for companies which had not done well and eventually got us Swiggy. Right, which obviously the rest is history. So I think that those, I personally feel, make for great investors. That it's not a unidimensional business; it's a 4-dimensional business, right? And are you there in good times, bad times? Like I have a 3 phone call anecdote.
Okay.
So I always say that, especially, like, let's say if you are on a cap table which has got 5 investors, right? There are 5 people. You may have come early, late. When the founder has great news, who is she going to call?
Yeah.
Who is she going to call? So supposing she's going to call you, if we are not number 1 or 2, that is terrible. I mean, we would like to be number 1, right? But sometimes there's some amazing early stage investors. Chalo, we might be number 2. We are okay with that. After that, not great. When the founder has really bad news, police has showed up, someone has framed something went wrong, who are they going to call, right? I would again say we will absolutely be number 1, number 2, because you need somebody who's going to run there and fix the problem, no matter what happens, right? And the third one I have is, which is the third phone call, is when you call the founder and the founder is in a meeting doing some stuff and looks at the phone and says, oh no, not this guy again. Again, he's calling me. That's the third phone. So I'm saying that should be like, no, this person is calling. It'll be good. They will be constructive. They will be helpful. This is going to help me. Let me jump out of the meeting for 1 minute and take the call. Maza aega. Right? Like, I feel that these guys, they're with me, like I will do it. So these 3 phone calls, I personally feel like if you're not thinking at that level, you're not truly understanding what the founder is seeking from you. According to me, the money is not important. Great founders will find money in 10 different places. It's what else you do, the above and beyond, that's critical.
I love that. I absolutely love that. I don't think I've heard a better articulation of that. And I think in a very small way, when I'm discussing with fellow investors, I do think that venture investing doesn't have a defined sort of framework, right? Yeah. And it is the above and beyond that defines greatness. And it's also very self-inflicted, right? You can't like instill it like as somebody at the firm. You can't ask people. You just have to self-select people who are initiator seekers on this. So I love that. Thank you so much for sharing that, Niren. I love it.
My pleasure.
I think one of the things, right, I just want to like bring a closure to the loop of thinking when it comes to venture investing and what you've done across the years. I think somebody on the podcast itself mentioned that I think the anti-portfolio is what teaches an investor more than what the portfolio does, because that contributes directly to good selection on the portfolio. Are there any instances that you can point to, or some investments that you missed for whatever reason? Maybe share that instance or the reasoning behind it that can add more color to understanding the art of investing better in private markets.
So I don't think you have 10 hours, but I have a anti-portfolio, which is, I've been around for like 17 years.
Oh yeah,
There
you've
is
seen it
not,
all
I've
actually.
seen it all. I think I've passed in the first couple of rounds of Lenskart, First Cry, Flipkart at 200 million. So I did go up to Norwest once and said, you should just sack me, because like, if you just look at my anti-portfolio, right, it is probably worth $10 billion or whatever. And then of course the very experienced folks in our Norwest, they turned around and said like, ditto, right? So I mean, don't beat yourself up is what I've learned.
Yeah.
But I remember that, for instance, Flipkart was at 200 million, and I went together with my sort of colleague now who runs Avatar, Mohan, right? And it was at some 20 times GMV. Okay, and we of course looked at global markets, so everything was trading at 3-4 times GMV, and we loved it, and we bought books on it, and we loved every, and we went and showed up there. And I remember this, that Tiger was doing an internal round. They come in at 40 at 200. Now we come from the US side where internal round is obviously biased, so we said, listen, so can you 160 million, right? Like my, as an early investors, my hands were shaking, and I was like, 160. Yeah? It's like Sachin was like, no, 200, right? And because we have 200, and I was like, and then and I had done all the math. I'd made a business plan, model, and of course, I could only see that Flipkart would get to $1 billion at that time. There was no vision. There was no, you have to remember, I came from Bazi where 1 million, and we had seen lots of e-commerce companies come and go, right? And just no market size. So we did not have that ability. I did not have the ability to see that. Mohan, on the other hand, said, it'll be a big company, and he's a very gut feel, instinct, amazing investor that way. I had done all this math and deliberate and this and that, and and then he told me that, Niren, 160, 200, why does it matter? And I said, of course it matters, like 10 times, 20 times GMV, 24 times, this, that, and then, so this is, so I mean, of course, rest is history, and I would say that my early years, having been like a CA and having been very quant driven, like I would do a lot of stuff. And then I think
You
in the
were
later
avid
years,
stock market investors,
avid stock market investor from like a
We'll
very
talk
young
about
age.
that.
So, but now I think I've sort of, over the last, I want to say 10 years, maybe not even, like first 5-7 years were still slow learner, right? In the last 10 years, I've grown that sort of muscle of saying, how do I feel? Right? What's my, so it's sometimes, this is again, like I said, it's a 4-dimensional business, right? You can't go with one of your senses into a meeting, and you can't go if you're not fully present. You can't go and be on your emails like a lot of people do. I mean, you just can't do that. You have to be there, you have to listen, you have to think of all the things that could go wrong. You have to think about, how will this company exit 7 years later, and if this became my anti-portfolio, why would it have become my anti-portfolio? Right? Like I do an exercise with all companies saying that I woke up in somehow 5 years ahead. I'd gone to sleep and I woke up 5 years ahead, right? And God forbid nothing happened, but it just happened there. And I found out my company has become the biggest company in India. How did that happen? Right? So it kind of gives you the opportunities
To think
of
forward.
to think forward and say, like, 5 years, you don't know what happened. You woke up, you read the paper. So this company I'd invested in, I'm looking at right now, became the largest company. It's like, $400 billion, right? How did that happen? So you now are very open to, like a detective, you think of all the opportunities that can happen, right? You're seeing the upside here. And I do the converse. Saying I woke up and I found this company is dead. It died in the first year. How did that happen? What could have happened? Because I'm solving. So I think some of these things are very critical, but I also realized that I learned a lot from those kind of lessons that, I met Supam from First Cry, amazing person, 20 pre. I looked at some global comp, that, diapers get sold on Amazon. And so, for some silly stuff, you get very caught up. This is a macro business, right? Especially when you come in early, it's one of those things where you have to get 8 out of 10 things right and the company will be great, right? And you don't have to get 10 out of 10 right. And I think that part, just understanding that intuition, learning, sort of going with a little bit of, rather than too much precision, going with a little bit of an overall feel, those things are important for greatness, right? And it took me a long time because I didn't come from there, right? It took me a long time to hone that skill, long time to trust my gut, long time to actually act on my gut, long time to be able to have that sort of ability to say, let me put money. And then what I've learned is, and the learning was fast after that, that when things started working well, when you sort of mixed both the qual and the quant, right, that it really works. So I mean, just an example. But look, my list is, like all the founders who are, I mean, a lot of founders know me very well, and I would have met them. We were never, low on industriousness. So I would go and meet them many times, and they would tell me, Niren, are you going to do this deal or not? So a lot of the early founders, I apologize. It was our loss, clearly. But at the end of the day, we always were true to giving great feedback. We were always very, very polite. We were always very thoughtful. We never shortchanged anyone. We were never sort of, arrogant. And even today, all the top founders and many of them were not in, right? We have great relationships, and for which I'm really thankful.
I'm so glad you mentioned that, because so much in the venture business, you pass most of the companies.
Yes.
Like 9 out of 10 companies you pass, actually, right? Maybe more, actually.
Yeah.
95 out of the 100. So if the business is of passing and selecting only some, you have to maintain such strong.
No, and again, the above and beyond, right? Yeah. I had an ex-colleague who actually, literally, the minute they found out this was not for them, they would leave, kind of make that meeting shorter. And honestly, people are very intelligent on the other side.
Yeah.
They understand that, right? On the other hand, I have always given time. Right. And I think the culture here today is we will spend that extra 20 minutes for the answering the questions which you want, politely but honestly. Also, not just saying we'll come back to you and then never answer a call and all that, which I think happens less now, but used to happen a lot earlier.
Yeah.
And so that is also really an important element of the culture, saying that, listen, that this is really our customer, and that customer, no matter what, is, if it's not a customer today, because we can fund you in pre-IPO rounds, right? This may be a customer 5 rounds later. Yeah. So please make sure that, not for any other reason, but it is that reason, that you are very humble, you are very clear, you have given proper feedback, timely feedback, right? You have answered any questions, spent extra time, going that above and beyond, right? So,
no, I love that, because especially in your business, like you pointed out, like you really pass companies routinely and invest in them again, right? Yeah. Many examples in the portfolio. But no, thank you so much again. I think I really appreciate the vulnerability in sharing that there were mistakes in the past. And also the acceptance in knowing that, I mean, you didn't mention it, but before we were chatting, I think you were saying, right, since then the loss ratio is, I mean, within the invested ones, right?
Yeah.
Very few, right? And that's the best part about learning on the job. And I think as a venture investor, if we can't figure out, I think for every loss, there are many wins that are in the ecosystem. Yeah. So I love that. Would love to now also, I mean, it's only fair to talk about the big wins, right? We mentioned in bits and pieces, but I think I was doing some research and I spoke to 5-10 people, and everybody said, right, like, we'd love to know what the stories behind some of the great companies are. This conversation wouldn't be wise unless we spoke about Swiggy. It's one of the most like legendary institutions of our time, what an ecosystem they've built, and just that food delivery business in the country, right? Like very profitable for 2 companies. Talk to us about how Swiggy happened, right? Like you came in very early. What was the thinking? And maybe just give us a deep dive into how one great investment really took place. If I'm not wrong, you entered at some $30-40 million of valuation. Yeah. And you, of course, we all know it's $10+ billion, something like 14-15. I don't know. Not accurate with the numbers currently. But what was it like with Swiggy?
So with Swiggy, we are very thesis driven, right? So you have a certain, and sort of at a lot of point of time, there was a point of time where, my entire family ate pav bhaji, which is a Mumbai delicacy, right? On Sunday evening. So I would, there was no driver on Sunday evening. So I would take the car out and drive, and I would go to this local Shiv Sagar, which made some amazing pav bhaji. And then basically there's no place to park. So I would park near a bus stop and I would always get a ticket, right? So I was like, out of sheer frustration, saying that, why is there, like in India, everything is assisted. Right? Like, I mean, you will have like some security guard, you will have a tea boy, you will have a driver, everything. There's so much assistance. Like I will assist my driver to find his son's mark sheet on the web, right? It's mutual assistance. I'm not even saying that, how come there's no assistance here? And then a few people who were delivering, they would deliver, sometimes not deliver, it would come on time, not come on time. So we actually went down hunting for effectively a great food delivery platform. We looked at, Food Panda at the time. We looked at Tiny Owl. We had in fact done great work in 2-3 days. We had looked at even Zomato, right? And at that point of time, what our thesis was is that, listen, we want someone to come and deliver it like in a full stack way, right? And the reason was very simple. We had this little saying that when you're hungry, you get angry. Right, because khana, a lot of people na, that when they say कि, "Arey, he's hungry," especially children and all, you say, "Arey, he's little hungry, usko lunch nahi mila, khana khayega, he'll be fine," right? So that was the thesis, and they said, look, in India, like Flipkart has to build its own delivery, right? Similarly, you have to build your own delivery system and this, because otherwise you will not get in time. At that time, Domino's used to do this 30 minutes or back, and people said that look, they could never do it, and that's why they had stopped it. But what if you could really do that? Right, for everybody, not just for one pizza company. So that was the thesis. We looked at all these people. We said we're not comfortable. We came close to one or two. Then we realized we're not comfortable. Then when Swiggy came by, right, it was a boon. They were like focused. They were tech driven. And by the way, when we did it first, that time they were doing calls at the back end, because the restaurants were not even taking the order online. Like, it would go to them and they would not see it, and they would call and say, you got this order. And also it was very different. It's 500 orders a day. But that was the thesis driven, and we were very clear that food tech will be big. Even when there was a next round where at one point of time food tech became very, very toxic. Nobody wanted to fund it at that point of time. We had a great company called Swiggy, growing really well, fabulous team, went to 50, 60, 70 people. No one funded that round, and then Elevation and us led this round, in Swiggy, in that time, right? And I'll tell you that it's a very interesting anecdote that even at that point of time, right, we were like struggling because the last round was at X, and I think Harsha wanted 100 million pre or whatever, and we were like literally thinking about that, okay, now no one has funded it, we're doing an internal round, that too at a high price, right? And Harsha looks at me and looks at Mukul and tells us that and Sumer was there and all of us, and he just says that, listen, don't worry about all this. We will be $50 billion one day, and I will be there, right? And I remember this because I went back saying, yaar, ye kya bol raha hai? What is he saying, right? Like 50 billion, we're barely getting this round done at 100 million, right?
And this is 2016.
So, this is 2016, right?
Wow.
Thereabouts. And I was sitting there, and I remember this distinctly because it was so, like, for me, it was like, what is he saying? Like, how can you say you've not got money in 100 million? You're barely getting this, you need that money today. And you're talking about 50 billion, not about 1 billion. You're about $50 billion. Look how far we've come, right?
Yeah.
So I think that sometimes these things are just, amazing to be on these journeys together, right?
Yeah. I can only imagine how gratifying it must be to actually look at the journey up close, right? To have a front seat to it.
It's not like we didn't go through ups and downs, right? Like, I mean, of course, going from that high burn which was required to create the market to get to profitability had its own consequences. There was a lot of debates on the board. There was a lot of times where we were like pushing for unit economics, and of course, but so I think the journeys take time, but a lot of journeys you have to look back and say that, look, did you do a great job in that journey as a partner? Did the team do an amazing job as a founder? And then, I think outcomes, honestly, in this particular case, we're very gratified with, but matter less. Because if everyone has fulfilled their sort of full potential, I think that the outcome will come eventually.
Yeah.
Sometimes it just takes longer. Inputs. Focus on the inputs.
I love that. That's so nice to hear. And I think 9 years, 10 years, and it's been $0 to $15 billion.
Yeah, it's been phenomenal.
Incredible. Yeah. I love that. Maybe you can do one more. I love that. And I think I'd love to hear maybe a more non-obvious example, right? I think a lot of weightage gets put to like these consumer companies which are touch and feel consumers of every day. But maybe an off-business, a Maggi, whatever comes to mind in terms of, how they took place, what was the thinking at the time, how much they've grown since.
So OffBusiness, of course, we knew Ashish. He was ex-Matrix, and he had started this company. So initially they started as a B2B commerce company. And then along the way, they started monetizing it by using lending and financing, right? And what happened, of course, because that was the monetization, most of the company had moved towards lending, financing. Nobody found the commerce business that important. So when we came in, we realized something very interesting, right? And of course, as I mentioned earlier, just become profitable. So we realized that the finance business was monetizing two businesses. There is a proper B2B commerce business, which was sort of focused on MSMEs and others. And then there was a lending part of the business. So now I had come from eBay Strategy and Ventures, where we had segregated eBay, which was not a B2B, but a C2C business, which is a business part. I think of a marketplace, and the financing part, which was PayPal. And it had almost resulted in doubling of value because otherwise nobody could understand that animal. They were like, is this financing? Is this thing? Is this, whatever? And we had done that. And as soon as we came in, we had a lot of brainstorming with Ashish. And of course, he was very involved in that and said that, why don't we segregate these two businesses? And we started talking about it to investors. Nobody understood. The minute we segregated the two businesses, and of course, they performed phenomenally and they continue to perform phenomenally. I think they're doing some 800 crores of EBITDA in the B2B commerce business or whatever. At that point of time, what we realized that people are now, we are finding two separate sets of investors. There are certain investors who just like all this lending and financials and profitability. And there's certain set of investors who want marketplaces and growth. And, it's a $1 trillion market, right? The whole B2B side. And it's grown like at a crazy pace and it's doing really well. And both, of course, have very strong ROICs and ROCs and ROEs and things like that. So the minute we segregated it, I think it was a period of 18 months where the valuation went up 10x. Wow. It went 10x, 3,000 crores to 30,000 crores. So it was just because sometimes what happens is in a very complicated story, right? Until you distill what you stand for and until you sort of say that very clearly and then also get it executed, right? It is not easy to attract the right kind of capital. It's not about attracting capital, the right kind of capital which can understand what story they are backing. Yeah. Right. And so, that was like an amazing journey. Every 3 months or 4 months, there was a different round. And the businesses were keeping pace, but it's just the multiples also were going up because people don't understand that story. And again, it's just a phenomenal team. Ashish, Ruchi, the whole sort of off-business team. I think most people know them well, but obviously all sort of thanks to them and amazing execution, right? That without that, execution. Nothing happens. So that's another amazing story. I'll tell you about the Amagi piece. So Amagi, we had met Bhaskar 3 or 4 times. Again, another miss from early. And we always, they were building great technology. And as you know that basically they're a SaaS company today and effectively they're powering all the OTTs, right? So whether it's broadcasting, whether it's streaming, all of that, and even advertising, they power all of it. They are one of the deepest tech SaaS businesses I'm aware of, right? So there was a point about 2.5 years ago where some of the investors needed to just exit. And of course, a lot of people saw it. There was a banker involved. A lot of people saw it. A lot of people couldn't understand the story. A lot of people couldn't understand the potential in what they do, right? And the third thing I would say is a lot of people actually were also a little bit suspicious of the fact that why are these people leaving at this point, etc. So I think, basically Avatar, Mohan, Axel and us spent a lot of time on this, right? To distill it. And one of the crazy things about this company is that when you look at some of the top broadcasters in the world, right? And NBC, Universal, some of these people, their entire business is being streamed on Amagi. It is not a SaaS company doing a little accounting on the side or something or your customer support. Your core business with sort of, I think 3 nines, 99.999 is uptime is being done on Amagi as a SaaS player. Right. And this business was growing and it showed. We spoke to clients, we spoke to the US, we got our US partners involved. We have a very good guy called Dave in the US who had come from Comcast. We got him involved. So we were able to really sit down and say that this is what and it made sense because look, this tech was all built for India, but India, the market wasn't there. They had flipped it over on a wing and a prayer to the global side and it was taking off. And it was just met by disbelief instead of a lot of, claps over here in the Indian market. And I think that the ability to have been able to distill that and understand, and then, at that point of time, I think we were doing, I want to say probably $22-23 million of ARR. That has grown about 7-8x in the last 2.5-3 years. Wow. And gone to 135 million ARR. So, and what a tremendous team. Bhaskar is a very unassuming person, but that mind is amazing. And, so we have a great set of sort of 3 founders, great CFO. I'm just saying that the way they've built out the company. So this company had actually been built sitting in India with, Srini, one of the co-founders, moving to the US, doing everything on his own. right?
Wow.
And with one or two people, right, who are also very good. Built out the entire ecosystem in the US, the sales team, the product team, the marketing team, the different businesses. And right now, it's a great company which, at some point of time will go IPO.
That's
Much
lovely.
like off business, yeah.
Yeah, I think of business also what some 3 billion, 25,000 crores top line. Incredible numbers, and I've actually had Ashish on this show twice.
Yeah,
I love
I've
him
seen
that
that.
much.
I've seen that. Yeah.
I think just incredible to hear both these stories, especially about Imagi as well. I don't know how many people are aware, and if they're not, they get an opportunity to hear about it for the first time. So love it. I think this goes also. I think goes back to the first like previously when we discussed, right, doing deep work and having like a point of view, and above and beyond, like you do the work
And being contrarian.
and
See,
being
when
creative.
because everyone would call saying, "Why are you doing this? What's happening?" And we'd be like, "Look, I mean, we like the business, so we're doing it." Like, do you know, 18 people have said no. It's like
That's
doesn't
fine.
matter,
Yeah.
right?
I
So
love that. You've seen the ecosystem when there were no unicorns.
yeah,
Now there are 110.
yeah,
You've seen multiple waves in the country, right? You've seen the ed tech, e-commerce, food tech. You've seen all of them.
right,
If you had to just paint a picture on, interesting spaces that come to mind and just directional advice in terms of just numbers and where we're headed, right? Because we say
yeah,
that we're going to go from like, I don't know, a 4 trillion economy to a 10 trillion economy. Combined market cap of Indian tech companies is at 150 billion dollars.
yeah,
Where do you see India headed from that direction? I think just the purpose of this question is that if our future founders watching this and they're brainstorming in different spaces, I'd love to hear your opinion on a couple of them, like maybe B2B
sure,
and maybe financial services is so strong for the firm.
right,
Any of these, if you can mention very quick insights, I think I would really appreciate that.
sure. So let me start with a couple of thoughts here. That look, I think that there is no country growing as fast as India at scale, right? We are going to be the third largest economy in the world. We're, putting behind folks like the UK, and it is not happening by chance. It takes a couple of 100 years in the making. So I often tell founders as well as our sort of some LPs and others that if you were to be an investor or a founder in India, you are in the most lucky position when you look at the past 100 and next 100 years if you were here for the next 10 years, right?
Okay.
I'm that big a believer because it has taken a long time coming. If you look at where India was great and where things were doing well, it was like prior to the East India Company. We're coming to that greatness again. It takes cycles. Countries go through long cycles, and of course those don't remain forever. You can see what happened in China. At some point in 10-15 years we will be past and somebody else's time will come. That country will be lit, right? So at this point of time, I actually think that it is phenomenal. If you start something, you don't need capital. If you have a 15-year time horizon and you decided to sell these plants or a glass or whatever, and you're good at what you do, you will still make amazing money in India, right? Some things might be bigger, some things might be smaller, but it is a great time to start, right? And it's a great, and back yourself. Sort of, you don't even need to raise money. I'm probably not doing a great job for my own business here, but I would say that you don't need to, if you do it slowly, steadily. But the one thing I would say is you have to commit 15 years. You can't commit, everyone says I'm here for 5 years and then 15 days things go bad and they're like, listen, man, I'll go get a job,
Yeah.
No, 15 years of commitment. You don't need capital. You will build a great company if you have good jobs, good IQ, good EQ, hard work. You will, because that is the potential the country is offering to you. That is massive. And we are in a very lucky generation to be here at the right place, right time, right? So you should never forget that. In terms of areas, look, I'm very excited about the new economy, right? If you look at China, and we studied it very deeply, and I'm not talking about the challenges it's going through right now. At one point of time, China was sort of a 4 trillion market cap with Alibaba's natural market cap. But today it's a bit depressed on that, but natural market cap was 1 trillion itself, right? And what we saw is, and I saw this when I was in the Bazi days, at some point they were 40 billion, right? And suddenly in a period of like 10, 12 years, from 40 billion to 4 trillion. It's crazy. Now, a lot of people, and we are always, critical of ourselves. So we also did some work, said, okay, our GDP per capita is not the same level as China. So it's not fair to say that we'll have a $4 trillion new age economy.
Yeah.
So I think that our chances of getting maybe, to a number, probably 1.5 trillion, 1 to 2 trillion maybe. Today, like you said, that, different estimates on where market caps are. Let's say that the market cap of the economy of the new age part, let's say is 150 billion, maybe plus minus, 20-30% here and there. So look at the opportunity. There's a 10x here. and 10x you're probably in 6-7 years,
Yeah,
right? And
which is
10x
huge.
and huge, and some of the companies are already here, right? So if you really think about it, and someone tells you that look, Alibaba in China at the right time became $1 trillion, do you think something in India will be trillion? They'll be debating. I'm just asking a very simple question: which company? There will be a bunch of companies, and which of those are going to be 100 billion in the next few years, right?
Yeah.
I think that's going to happen. So again, these numbers sort of creep up on you, right?
Yeah.
Like when when we started, I remember Avendus coming out with the first internet report, and we all sat down and they were brainstorming, and I was like a veteran of, because done Bazi and all that, and we said that this market can one day be $1 billion, right? And we said this with like, and I was like scratching, I said, little aggressive, but I think you can get there, right? And that was like how it started, right? In 2008, 9, we were talking about billion. Now we were already at 150.
Yeah.
Before we know it, this is going to be $1.5 trillion, right? So big are going to get bigger. Lots of new. Now the other interesting thing is India has a lot more fragmentation, right? So it's not like there is an Alibaba and there is a Tencent which is sitting there and sort of sucking out a lot of oxygen. So you will see a lot of unicorns,
Yeah.
right? It's not like one or two of them are sitting and doing that, right? So my 2 cents is no better time, right? And I actually think that it's a great time to, as long as you commit enough time and you have sort of enough fuel in your this thing to keep going, it's a great time for new economy. That's one area which we think. Now eventually, again, in the new economy, eventually you will have to get profitable. But it happens. You have seen all these great companies today. They do get there. They do get to free cash flow. They get to profitability. So many great companies have listed now in the last 2-3 years. So it will happen, right? That's one. Second thing, I think that, areas, I actually think there's going to be a renaissance in industrials, and it's a very sort of offbeat topic, but I would say that, so if you take manufacturing, right, you take industrials, you take B2B marketplaces, right? Like, I mean, the off-business market, it's $1 trillion market today, right? You're scratching the surface. If you're doing $3-4 billion, you're tiny in that, right? That's the runway which you got. The entire industrial space, because India is moving from a services economy to a manufacturing economy led by these governments. I think you just see the growth at which manufacturing has happened and the growth at which it's doubling, right? So over a 5-7 year period, and I think that is going to be another big area. And of course, the standard things of how to, I like overlays, right? Like what can AI do in the manufacturing sector, right? What can financials do towards, like, financing heavy machinery, right? Things like that. So I think, of course, we are very starved. Credit GDP ratio, our debt GDP ratio, which is a big driver of sort of, and debt, drives, by the way, your GDP as well, right? So if there's not enough credit, the GDP is not going to grow. So that's a really important driver to your, or this. So I think lending will be very large. I think that you will find that all these finance companies, NBFCs, banks, they will continue to compound, right? Because the credit growth has to be there. So those are sort of some of the sectors which, I mean, I love healthcare, because if you look at healthcare, right, I mean, you just go to the US and you see where we are. It's not even like you don't need to use your common sense. You just look at it saying all of these things. Like we've done a hospital chain called Regency, done by my colleague Shiv, and it's a phenomenal company, right? And they're sort of like a hospital chain driven by an amazing doctor and his son in UP. Now that is a big country. It's the 7th largest country in the world, right? When those hospitals go up and when they get to that level, and they've already got some amazing hospitals in Kanpur, etc., they will do phenomenally. So I'm just saying that there is so much opportunity. So I love healthcare because I also feel like in 15 years, India will start aging, right? And the last thing I would say is that I like mass market. So wherever you look at this, I mean, cutting it in a very different way, a lot of mass things, whether it's 5-star or whether it's off business or whether, which are like even Swiggy. Swiggy, by the way, I don't know if you know Swiggy, I think employs about 350,000 people. So the mass market will help the demographic, right? As long as you are helping somewhere the mass, right? I personally feel that also resonates because a large part of the the sort of our entire success as a country is driven by the fact that we have a billion 5 people, and the mass is the billion people sitting there. So if you are playing into that, if you are creating some jobs, if you are creating some impact, you're sort of funding the bottom of the pyramid, you are likely to do much better, So I think those also, I personally feel that
I
those will
love
be
it.
very interesting thesis.
Yeah, no, thanks a ton for sharing. I think I love that it didn't have a lot of buzzwords, and it like broke the market down in very like fundamental measures. And I think these are fundamental truths that have to happen. And combine that with the data that you shared, I think India is the opportunity up for grabs for everyone.
Yeah.
And I often say that. I mean, I'm a 25-year-old something in this economy, which is just such a privilege, right? Because we get to see firsthand, not companies being born in the past, but happening today in front of our eyes. So that's amazing. I want to end with a couple of final learnings from your personal journey, and therein I think it would be worthy to understand how you've looked at your own career, right? Because it feels like you were early to the internet economy as an operator, and you took a very early bet in terms of also investing at a time where a lot was happening, right? The year that Flipkart started is the year you became an investor, right? Talk to us about what your personal principles of maybe some of these monumental decisions have been. You, of course, you've also mentioned in the past, I was watching one interview of yours, which are very few, by the way, that you were an avid stockbroker. It's a very early age, like school, if I'm not
Yeah.
wrong, right?
Yeah.
So maybe combine all of that to give us a viewpoint on this is how Niren thinks personally about his life,
Right.
his decisions, his career.
Right. So firstly, I want to say, like an Oscar speech, God has been very kind, and I thank my family, especially my wife, for a lot of things because I've got that leeway. I always feel like it's like Maslow's thing. You can do a lot of stuff
Yeah.
when you're sort of, your back is fully covered and someone's got you, right? And that
Yeah.
that really helps. And a lot of it, I personally feel a lot of these roots, even for founders, even for a lot of it comes from your childhood also, right? So I actually, my father's a CA and was in practice like 70 years. He's 92 years old, very healthy, still goes to office,
Wow.
and yeah, and he's still buying and selling stocks every day. So he's superb guy. So bottom line is, like in the ninth standard, I was sort of, my weekend reading was balance sheets, right?
Wow.
And I was investing in stocks, and my dad had the original ACC certificates, and so I'm the fourth generation investor, by the way. I don't know if
Ooh.
there was one, but my grandfather and my great grandfather also did some investing.
I love
So I did all this investing. Then during the 1991, I went to Sydenham College, and the beauty of that college is you didn't really have to attend. So my dad said, nothing doing, why don't you work at this stock market or something? So I became a broker over there, and I went into the trade, and I used to do those things, and I actually traded. My claim to fame is I've traded against Harshad Mehta
Oh,
in
wow.
the ring with that, that call and cry, what you see in those movies,
Yeah, the
right? They
movies.
were standing, I was standing there, but I was a kid, right? I was in my college days. I was going there, I was doing all these, and I had some very great mentors like Mankikar sir, who's like very well regarded in the stock markets and all, who and I learned fundamental investing, how to read, how to balance sheet. So
And the motivation was what was it like beyond your dad pushing you or like
no, I
like
was very,
inspiring you to do this?
look, I mean,
Was it money?
it was initially, no, initially it wasn't. Initially, I was like, let's try it out. I'm a very curious person. So what is all this stuff? And given that I had been investing, to be in the inside was very different. But along the way, during that time, I was the only college guy who had started. My dad told me, you cannot invest anything more than your pocket money, which was very measly. But the way I had compounded, it would put any VC to shame, because I was compounding, like, I think I'd started with 1,000 rupees and made 1 lakh rupees, right? And I was threatening to buy my own car, and my dad thought this needs to be shut down. but more uniquely, I would just say that it was a great time to learn, and of course, it put my interest into this whole world of finance. And while I was becoming a CA, basically, I think I'm an insanely curious person. So when I got this opportunity, because I'd been on the outside and investing from outside, I wanted to see the innards of the stock exchange. You have to keep in mind that the stock exchange that time was a ring, and you could go into the ring and trade and all. So I learned a lot, but eventually, I must say that I was allowed to only invest my pocket money. But the rate at which I was compounding that would put some of the top VCs to shame, because I'd started with 500 rupees, and towards the end of the year, literally 500, not 501, I had made 1 lakh rupees of profit.
One
It
lakh
was a little bit,
rupees.
yeah. And that time, in 1 lakh, you could buy a Maruti and all that.
Oh wow! And this is
Lower
what
than
year?
that. This is in 1992. This is the Harshad Mehta
1992.
time,
Oh
92,
wow!
93, right? And so, I mean, at that point of time, my dad was like,
32
dare you
years.
buy a car and all that? Don't do all this. But that was not the intent. But I really loved what I did. I learned a lot. And, and then stock market was one side of it. And then I've kind of kept doing new stuff, right?
Okay.
And I've often looked back and I've asked myself, why did I do it? But I just think it's curiosity with getting bored easily. like both these things together. So then I was also like doing audits, and I was doing all this tax and stuff like that. And of course, I
Were,
got bored very quickly.
were you a CA?
I'm a CA.
Oh,
I'm with
okay.
KPMG, so
Oh,
I did
wow, I
that for
didn't
a
know
few
that.
years. And
That
then
is,
when I got pretty bored very quickly, because I remember that in KPMG, somewhere in the middle, I realized that the guy I'm finding problems with in an audit is the same guy paying me. After a while, how will this work? Because I plan to like literally find enough problems to shut him down, I mean, that, young, right? Young and stupid. So then I decided, and they gave me a chance to be startup in a corporate finance thing, which was phenomenal because I
okay.
was always in the office. I worked like crazy. One of the attributes I would say is always been hungry, curious, and sort of working very hard, right? So I learned a lot from debt restructuring to valuations to mergers, acquisition, a lot of great learning. Then it was at some point of time, one of the guys was working with said that, and I was like, I had a very close friend. His name is Gautam Takar. He was in PNG. I said, we should start the eBay of India. Then we were doing that. We were about to go out. And someone said that, look, this some two other guys are also starting. This gentleman called Avnish and Suvi, they are starting. So I went for a recce to find out my competition, right? Before we knew it, I was interviewing. He said, ये तो बहुत अच्छे बंदे हैं. They are sort of on their journey. We are going to be late anyway. So both of us joined. Gautam was the CMO. I was the CFO, COO. So
Wow.
eventually I handled that. Then again, there also in 8-9 months, finance, which was there, was fully streamlined. Right. And I was like, I'm not needed here. And they said, no, stay. And they gave me product, marketing, right? I was running categories, some categories. I was running customer support, trust and safety. So I've done everything. Then at some point in time, we realized that, as I said, 1 million users, kuch nahi ho raha hai. So we started a B2B business. That business from day one, I was the founder, started it, hired a whole team, and that business was profitable from day one. Eventually, when we sold also to eBay, right, that was a pretty large business, large component of that. So then we did that. Then again at eBay, I realized कि देखो MBA किया नहीं है. I always planned to go abroad for an MBA. I thought that my MBA was bazi anyway. So I said, Acha, what should we do next? I said, let me try buy side. Nobody gave me a job in buy side that time. So they were like, what are you doing, etc. So I said, okay, let me go to eBay. They loved me. They had the best integration, migration. We were up all nights. They were like, this is the best it's ever been, best acquisition. So I said, okay, great. You love us so much. Why don't you give me a job in your venture group in the US? So I went there very quickly. I was going North and South America. South America, I had never visited and I love traveling. So my wife and I decided that, listen, we'll go and conquer South America, go to all the countries. We reached there, job got reorged, right? And before I knew it, again, I had like 3-4 offers because, the first 3 months I'd done a great job over there. And so I've kind of hopped around. So if you look at this piece, right, that I learned auditing, I learned investment banking, then I learned sort of, being a CFO, right? Before that at Bazi, right? Handling investors, understanding their side. We had a lot of investors. We had raised a lot of money. Then I went to eBay. I learned strategy. I had got 25 people from Harvard and all the top schools, McKinsey. This, like, I was the head, and eventually I was running strategy and ventures for eBay globally. The strategy piece I'd never done. So I literally bought 7 books and I was reading rapidly because I couldn't understand basics of it. And all these really smart people reporting to me, which were like, and I was feeling like a complete fraud. So at some point of time, I learned a lot of strategy. I learned the venture part. So, in some ways, when you really look at when I came to Norwest, I suddenly found that across early and late, this whole serendipitous journey has really helped. Whether it is being on the side of the company and being an entrepreneur, where we started the B2B business, being a CFO, right? Being a person who raised funds, being a investment banker when we take these companies public, being a sort of, on the venture side and being able to see things which, a strategic would look at as an eBay, right? Or running strategy. Like today also, I love sitting with all the companies and let's build that strategy. Let's build, what are we really doing? What are we not going to do? Right? Things like that. So I think very blessed, and very thankful, but a lot of these things do help. And
Yeah.
I personally feel that like I am sort of a little bit of what I am today because of these experiences, right? Even things like, in KPMG, I worked on financial services. And I used to be the first person in the whole financial services. I merged some branches and I did some HDFC, Times Bank valuation and all that. That has helped me today. right?
Yeah.
Similarly, eBay's sort of consumer internet or Bazi has helped me because we did a lot of deals. So everything, I think, like your past does define you in a lot of
Yeah.
ways. And I think that the journey has been all over the place. And I honestly, but I did know very early on that I liked investing. I would say that, from that ninth grade, whatever I knew I would be an investor. I didn't know whether I'd be a venture capital, private equity. I joined Norwest because they wanted to do both VC and PE. They
Okay.
wanted to do growth equity and early stage, and I wanted that ability to have that canvas to sort of paint whichever picture made sense at the time and which we liked. So it's
Yeah.
been a very
Yeah.
great journey, and I'm very grateful for that. Right?
Yeah, no, I can imagine, and it just shows. I think you can only connect the dots backwards. It's such a profound
Yeah.
statement, and it just adds back. I mean,
Absolutely.
all of those experiences you are leveraging so well as an investor. I have to understand better. And did you think the Norwest journey will be this long? And it feels like
No,
you're in for a ride, right? Like for
no,
life now.
no. I've been here 17 years, and the last two jobs I did, they were 8 years. So I have a good, I love looking at patterns. So I was very clear. And around the seventh year, also, I started thinking about it, saying my eighth year is coming. So where am I going to go next, etc. So I didn't. I think what I've really enjoyed is the ability to build this, right? And we sort of look at two journeys even within Norwest 1.0 and 2.0, right? When Shiv sort of joined back and we started this journey where we decided to move. Initially, we started with very early and we did even some publics and all that. Highly successful, got great. But as we sort of matured, we realized that the space we really like and what we're doing, around 2017, we'll do more late stage venture, right? And we'll do more early private equity, which is together clubbed as growth equity.
Sure.
Right. So now we do deals which are like, 25 million to 75 million. We can write a 100 million check also, but we can also do a 10 million, as we said, with couple of the people we mentioned earlier. So I think that journey, that playbook is getting more and more solidified. We're liking it. Check sizes will keep going up a little bit. We are now deploying almost about $300 million a year. We like to be under the radar, as I mentioned. And it's been, I mean, it's a privilege to be in this market, right?
Yeah.
Even just the energy. I was talking to somebody the other day about Southeast Asia, and they said, the Indian market just has so much more energy, the hustle, the want to sort
Activity.
of build the activity. No, and also just the entrepreneurs are
Energy.
really out to build something. So the kind of quality of entrepreneurs, I mean, we're speaking about some of them, just I think it's a great, like, everything has come together. There was a time where we were not, like, I'll give you another very interesting anecdote. I had gone and spoken I used to teach a little bit at Stanford when I was in the US, right? I would do an entrepreneur class and all, and there I'd ask these people, and I was into it. How many of you want to be entrepreneurs? Now this is 2006, 7, and basically the whole class would put their hands up and all that, and the one or two people are like, I will not put up my hand because I want to be a consultant, right? So I came to India in 2007, fully excited with same gusto. I went to IMA, right? And I was taking a class there and all that. And I was just like, I went there and I spoke to them and I said, how many of you want to be entrepreneurs, right? And one guy's hand went up like this, and he was also like about to put it down as I saw you, right? And it was hilarious. And then I looked at myself and I said, what have I done? I've come here chasing the entrepreneur dream. I've taken up an India assignment. Where are the entrepreneurs? How that has changed, right? I mean, so many great, like, and these things always change. It's always a point in time, right? And they change, right? And to that extent, I mean, like I said, that I am very grateful, like, for everything, for everyone, everything. And so many people have helped along the way, right? So it's very easy to be like feeling like, oh, you've done this. This is a tough business. Being a VC, growth equity is a tough business. You have to be always on, and you're defined by how well you did in your last deal. And I think that that these things are critical, right? Your value system has to be very, very intact. And at least I think that most people, most of my friends, a lot of my friends are not VCPs, don't realize how hard. Like, they in fact have places, right? I go to Alibag or something, they'll all look, saying, Niren, you can do your calls there. You walk there, okay, while you're doing your calls. They now understand that, okay, this is a hard business, right? But I love every moment of it, right? So
No, I love it. I think the way you've articulated it again, I mean, it's hard, but you can only do it if you enjoy it.
Love it.
And I mean, it shows, like, to be in a business for 18 years and to speak with the passion that you have today, and I'm sure you do every day, and I'm sure founders see it much more often. It must be such a pleasure. So I'm so glad you're speaking about all of this. I think let's talk a bit about the beyond the investor persona. We saw the room that you built, right, like your office, and there are these the musician in you and the passion for music is evident. I'm sure you still look at the public markets. Talk to us about, if I had to ask you how your friends describe you beyond the Alibag and the working on trips, what is it like? What are your passions? I mean, no investor talk. What are you like beyond investing?
So I love sport, right? So I love music, right? And of course, I do like public markets and stuff like that, and tracking companies and things like that. I think those would be sort of this. Of course, above and beyond all that, my family comes first. And I think more and more kids are growing up. So time to create much more time for them. And dad is also 92 years old. So I think those would sum my sort of outside work life. I think in sport, I think there's a lot of learning, right? So I play squash, I play tennis, I play paddy, I play pickle, I play TT. So I think that every day there's something new. I'm in a community called Vivaria, which is really great in sport,
Yeah.
right? And so they have all these big tournaments going on all the time that we are all trying to enroll. And of course, I'm not some major player there, but at the same point of time, it's
You
fun
enjoy
and
it.
enjoy it, right? I think in terms of music, I love concerts and
Yeah.
music and listening to music. So music has played a very integral part of my life. You'll find me many times working with my headphones on, and or I even have a speaker here and I'm playing Shut the Door and I'm playing it loudly. And it's an integral part. I would study with music. So everything is ingrained into music. I have a lot of memories associated with music. So that
Yeah.
continues.
Tell us a bit
Uh,
about it. I was just like personally, I was just so curious to hear when you told me, right? Yeah, these T-shirts which are from
yeah,
concerts, right?
yeah,
Like I
yeah,
have never seen that personally. I'm
yeah,
sure like other people collect, but it's so fascinating.
yeah,
How does that like? I mean, is it a innate thing to find passion in other things and also go deep? Because people have passions,
yeah,
but don't go as deep, right?
yeah, yeah.
What is that like for you?
So I find, I mean, look, it's when you love something, it's kind of like, I'll go, we go to the US a lot because of Norwest. And then, there are always some great concerts and no one takes the effort to find out. In fact, a lot of my friends will write to me saying, I'm going somewhere, find me a concert, right? And I'm the guy who will like find all the concerts because I
I
have some
love that.
apps and I have all that, tickets and this and that. So I enjoy music. I think a concert, yesterday on Maroon 5, right? It's very liberating. If you like that music, you find that this. So I really enjoy that. That's the one thing I missed about the US. I'm really happy it's coming to India in a big way now. So and then what I do is like I've probably been to 100 concerts. I always buy a T-shirt, and now what you saw, we sort of made that T-shirt into like we've covered the arms and the back of the T-shirt where they print the band's name. We put up as in my room as like as sort of posters, right? So but going back to music, I think music is a very, again, it's a very sort of fourth, fifth dimension, right? This is a business which can get, a little stressful, and business which can get, very charged. At that point of time, I think music, so we're always playing music. I think our whole family loves music. Um, Coming to family, I mean, obviously, I try very hard to spend all my balanced time with them
Yeah.
because there's a lot of time I spend at work. And obviously, I have a daughter and a son, Ria and Neil, and my wife Sonali, and they are definitely the folks who sort of keep me going, right? And my dad is my inspiration. So he is CA, practiced 70 years, still goes to office at the age of 92. He's playing cricket matches in Vivaria. He's, so definite inspiration. One thing I've really learned is that from him is that you got to take care of your health, right? And always a very wise and positive person, and that's a great sort of learning. All of us, especially the younger guys will not understand this at all. But once you're in your late 40s, 50s, you got to prepare for old age, right? One of my interests in healthcare is because I really think that that's really important for the country as well, right? So those would be some of the things which I'm sort of excited about.
Yeah.
And the other thing which we like to do a little bit more is also like we as a team and even personally, we love contributing a little bit more to the society around you, because it's very easy, in the initial, like I had this little framework very early on. At the initial days, you focus a lot more on your career, right? And as you sort of kind of get married and all, you focus a lot more on marriage and family and kids. So you think of this as a triangle, right? So you have career, you have family, and then you have society, right? And of course, in the middle is yourself or whatever. So I think as you get a little older, you should start also not just moving from your career and you and not just your family, but also do above and beyond. And so we are starting to do a little bit of that. My wife works at an NGO, so we're starting to do a few things in that direction. So that's an area which I think I need to do a lot more. So that is
Got
sort of
it.
my, hopefully that's
Yeah.
something we do.
Oh, I love that. I think we should have started there actually. It's my bad that we didn't. But that is so fascinating to just know life beyond the investing. Thanks again for sharing, Niren. Just a couple of very quick final questions. I keep saying this, but it's just a fascinating conversation, so I keep continuing as well. But one of the things that's fascinating is I've been the one asking questions, but if I had to ask you, what is that one question that usually keeps you up? And this is not concern, but like things that you're introspecting on or things that you think about from a worldly lens. Is there anything particular that comes to mind?
I think a lot about legacy. Like, different people are driven by different things. So I often think about, am I creating the right legacy? Achievement is one thing, and I'm sort of not that driven by that, but I'm definitely driven by sort of people, legacy. So even today, like folks from Bazi, if they're sometimes thinking of changing their jobs, they still think of me as a little bit of a mentor. It's 25 years since then, right? And we still have like alumni meetings. So I think for me, at least, it's just a little bit of like, I have this, I don't know if you heard of this, but there's this thing of, when you are older, right? And you're an old man sitting on a bench, and somebody sort of sees you.
How do you want to be remembered?
No, will they come jumping and come and give you a hug, right?
Okay.
Will they come and how do they remember you, right? What's your legacy? What did you do for them? How did you contribute to their lives? So will they come and meet you and say, wow, so good to see you, I want to give you a hug, thank you for all these things? Or will they come and say hello and whatever? Or will they say avoidable, right? This guy is like a pain, so it's also what you want to be remembered by and what you want to do. And again, we are very small people, but I'm just saying that I think you should carry yourself that way, right? In that every moment when things are going up and down, can you carry yourself with a little more of grace, a little more thought, a little more empathy? And then that, in some ways, what kind of legacy are you building? What kind of mentoring are you providing? That, I think, a little bit more of what. So I care a lot about culture, people, relationships, legacy, those things. Maybe a little softer, but that those things are important to me.
No, I can imagine, and it shows. I mean, the way you've been so kind in our brief interactions as well, right?
My
And
pleasure.
how you've articulated so many of the things that are close to you. It just shows and personifies, and it's very interesting. I haven't heard of this particular answer before, so I'm so glad you mentioned it, and it's a great way for. I mean, I feel fortunate that as a youngster I can hear all these things, right? Because it helps
Thank
me
you. It's very
practice
kind.
that maybe in a younger age, right? So I love that. How to leave legacy, right? That will be my takeaway. Awesome. I think for the second last question, right? One thing that I often also ask on the podcast is, I mean, is there a particular, it's the Peter Thiel question, so it's not like true to me per se, but is there something that you have identified that a lot of people don't agree with you on? Like, is there a truth, like he often he puts it as, what is the one truth that you've identified that nobody agrees with you on? Is there something like that, a unique insight that people don't agree with you on?
I think in India, startups, founders, I'm very, very ethical to the T, right? And a lot of people feel and believe in jugaad, right? And this can be bent, and in a profit and loss account, this is a fixed cost, and I will put it up there somewhere, and I'll put it down there, or it's a variable cost and I'll put it down, and all that. I've always found that these kind of things, right? Though they're minor and everyone seems to be doing it, but these shortcuts always come and bite you later, right? So I've always, like, if you sit, like, in these board meetings, right, I will always be telling our finance companies, provide more for a rainy day. It hurts our valuation today, but when the bad time comes, your company will not fall down, from 100 to 0. So I've always believed in postponing gratification and playing the long term. If you ask us again, in like Norwest or our team, our ability to really think long, I think a lot of people think they think long, right? But truly thinking long and truly thinking 10 years, which is why I also told you that if you're a founder and you truly believe you can stand 15 years on your own, you do not need a dollar of money or anyone else to help you. You can build anything you want in India today, right? So the ability to truly think long, right, and to be able to stay for a decade in a company and to sort of really deliver and not want outcomes in the first 3 months, 6 months. I think that is really like I kind of feel a lot of people will say that they do, but they don't really in their behavior,
Practice it. Yeah.
right? And their behavior, their practice, they don't, right? So I think that is the one truth I've realized, that what is good about us is Norwest, our thinking in a lot of ways, right? If you look at it, our team, me, Norwest, all have thought, and like, look at it, I'm here 17 years,
Yeah.
right? There is a power of compounding which comes with periods of time. That compounding could be thoughts, that compounding could be relationship, compounding could be returns, that compounding could just be the ability to withstand ups and downs, right? And that compounding could be stock market returns, right? I mean, it could be like what you're. So I think that ability to play long and ability to have conviction to play long is very critical,
Yeah.
right? And I think that very candidly, my one learning is, and this is something I even ask in interviews, that how have you demonstrated long-term thinking, right? And most people are not able to answer that.
Yeah.
Right, the long term is like last year I did this and 2 years later I did that, right? So I think that is really critical, especially when you're playing the next 20 years of India,
Yeah.
right? You can't look, even India, like while we were 2 steps forward and 1 step back, I think we have become much better as a country, but now we're still 3 steps forward.
Yeah.
But there will be a 1 step back, right? And at that time the ability to have that conviction and see through, right, and stay, right, that is going to be critical, right? So that
Yeah.
would be my 1 2.
That's wonderful. I think just so profound to again mention it, and so difficult to practice. I think it's so
Very
easy
difficult.
to get short-term wins, to do something and just get that gratification in.
Yeah.
But as you mentioned, yeah, you've not just mentioned it, you've practiced it, and within that, I think being ethical, I think it's really really important to mention. Again, I mean, I'm so glad that you mentioned such core fundamental things, but with context that really helps us imbibe it better. So I think that's going to be my learning. This has been such a pleasure, Niren. My final question, and this is one that I often ask on the show. It's a bit stereotypical and a bit cliched, but I'll put you on the spot, and it often goes as, if you had to go back to the day you were starting at Norwest, right? Let's take a step back, 17 years back, and you could write to yourself. And the idea behind this is not to talk about any regrets by any means.
Sure.
It's to condense the wisdom that you've been able to grasp over the last 17, 18 years. What would you tell yourself? And by extension, what can we learn from that?
I have a very interesting anecdote as well here.
Please.
And I was just sharing it with someone yesterday, and they said this should be a tweet. But let me tell you. So that time, of course, Pramod Haq was my mentor, and he was running this. And in fact, they got me to join as a GP, and before that, general partner, right?
Mm-hmm.
And most of these funds, they normally take you as a principal, and as you perform in the next fund, you become a partner or and then you become general partner. But they were shipping me off to the India alone or whatever else, so you should join as a general partner. And I was telling them, by the way, and this was my lack of confidence maybe, that maybe I should join as a principal. I'm feeling the weight of the burden, which never happens, right? Normally, no one's asking for their own demotion or whatever. In some ways, I finally grew into that position, but it was really funny. The first 2 years, right? And of course, I was a bit alone, and I looked at a lot of companies, right?
And did you join as GP then?
I joined as a GP, right? And I looked at a lot of companies, but I'm just giving this whole thing of like, I was a little bit underconfident, right, at that point. So I looked at a lot of companies, and there was one partner who I was particularly close to, was a very senior partner. And I would ask him that, like, what do you think of this company? Because you take it to full partnership. That time there were 5-6 partners in Norwest, right? And a lot of people like these deals, but I would do a lot more work, and I'd find a reason, and I would sort of, and always nothing is perfect, right? You normally get an 8 on 10, you should be happy. I would be looking for that 10 on 10. I would not do those deals. I would never sign a term sheet, but just something which was of interest or whatever. So I had gone through like 8-9 deals which my partnership had liked, but eventually when I did more work, it was not a perfect. And the reason was, this person who I would talk to, every time I'd show him the deal, he is a very talented, wise person. He said that it doesn't really matter. So you're putting $3-4 million, you put it. It won't matter because your first 2 deals will fail. Everyone's first 2 deals fails. And I was like, no, I don't want it to fail. So this had gone on and on and on. And I'd reached 1.5 years, right, after spending 8-9 months in the US, where I had not done a single deal. Okay. And I was still in that mode, and and this person would keep telling me that it'll fail, and I was like, I won't let it fail. By the way, my second deal didn't fail, my first one did fail. Okay, so I was like really trying hard, working hard, and then at some point Pramod had come to India, and I told Pramod, look, exit is really important to me. This one won't exit. this is the worry with this one, that's the worry with that one, this, that. So he looks at me, smiles, and he's a very jolly guy. He looks at me, he said, Niren, right? To exit, you have to enter. Right? And I looked at him and I was like, the color went off my face, and I went to my wife and I said, I hope I'm not getting sacked. I'm not in a deal in like 2 years. I don't know what I have to show for it. But sometimes it's these things, right? That you have to bet on yourself. Right? I mean, of course, you have to enter into a company to exit. You can't be like playing the sidelines. And so I think that I would just say that like, it took because I was new to the venture game. I'd done corporate venture with eBay because I was new to the venture game, right? From very early stages, we had thesis, plan, strategy. It took us a little more time to implement. So I don't know if you know, but very early on, we started doing one or two big banks, right? And it was not venture. We started off with a bank. We started with Shriram City Union, which did very well. We had a 5x on $28 million as a VC. So it's just that having the confidence to back yourself, right? Early on. Right? I think it took us a few years to get there, right? And we were so worried about what the US felt and what some other partner felt. And in fact, I would say that, that I wish we had done that much earlier. I think a lot of those companies which we sort of on our anti-portfolio, we knew that we should do it. We just got very stuck on small things So I think that for founders, I would just say that, if you have a good gut, you feel it, right? Back yourself, right?
Yeah.
Like don't like there are so many decisions which are seminal, they're important. You have a lot of doubt and self-doubt. But the only person you can back is you.
Yeah.
Right? And the faster you get to peace with yourself and peace with the outcomes, right? Like you do the input and let the outcomes be, and don't get too troubled if it was wrong. Get better. Like every inch, every mile, you will get better and better. If you got that growth mindset, I personally found that I've looked at every deal we passed, right? And I've looked at how they've done, and I remember why we passed them. I've been blessed with that. And I recorrect saying, what did I miss here? Right? Like I know what I missed in Lenskart, I know what I missed in First Cry, and I know what I missed in probably 400 deals, right? And how did they do? So my report card, I'm learning much more from maybe my anti-portfolio and what I've not done than just my portfolio, right?
Yeah.
So I think just having that mindset and then backing yourself and just saying that, look, whatever I do, let me do with confidence,
Yeah.
right? So I at least found that would be my
Confidence.
No, just
Back
saying back yourself, right? Saying go for it. Like I wish we had done that. Today we are very clear. Like if there are 200 funds and they don't do the deal and we like the deal, we will do it. We don't care, right? Because we will do all the work. We will be more thorough than anyone else. We will back ourselves. It's not for me. It's our whole team. Right? We'll back ourselves because we know that we'll stand tall and we'll do it. And then we are either very smart or very stupid. We know that, but we will back ourselves and we will live with the consequences. I think that was not the way I started in this business early on. Again, because of circumstances, very early, early in the market, alone. Had not done VC before. Had a lot of these brilliant partners in the US who which were like I was trying to live up to. So there's a lot to learn from, right? So
Got it. No, but back yourself is such an important learning, and such a great way to conclude what has been a lovely conversation. I think I was just trying to in my head trying to calibrate what I'd learned through the conversation, and I think one thing I have to share that I think the experience, the learning, the iteration, the depth, it just shows. I mean, I don't know how to sort of like express it, but in my head that has been the biggest takeaway, that it just, I mean, it's difficult to quantify years sometimes, but I think in some way you have today, because the wealth of knowledge has just been articulated in such a great manner. And I was just feeling this pleasure of being privy to such great conversations firsthand. And hopefully, and not hopefully, I'm sure anybody who's made it thus far, and many of you must have, would have had a great experience. Thank you so much. This has meant so much, Niren. You're so kind, you're so honest, and so you're so nice in expressing everything that you've learned. And this means a lot, and I genuinely mean it. Thank you so much. This has been a pleasure. I love chatting with you, and we've covered so much ground that I'm sure if any founder, investor is listening, they're in for a ride. Thank you so much.
Thank you. Really appreciate it. I'm going to say one last thing. Probably my first podcast. Yeah. As you know that I'm quite media shy about all these things. But the reason I agreed to do this podcast is I am very impressed by what you've done. Like a one-man army. I think the quality of the questions and thinking, the fact that you do this sort of, extempore, and you do not, give any time to prepare, and the way you've built this, right? Hats off to you. I think in your own way, you are an entrepreneur, and I'm glad you're doing this. I think it's tremendous. I've seen a lot of these. Huge fan. Thank you.
Thank you so much. This
Thank you.
means the world.
Hello. If you made it this far, you've probably watched the entire episode. And if you've done that, I'm really grateful. I and my team try to put in a lot of effort to ensure that we can bring the best quality content to you. So if you liked the episode, if you watched it thus far, my request to you is to share it with people, to subscribe to the channel, and to ensure that we can keep growing. We are everything and anything only because of you, our listeners. Thank you so much for tuning in. We'll keep bringing to you amazing content. Cheers.